And July, but questions remain over the path for rates later in the year. Stagflation signs at Apple. The iPhone maker announces that it is keeping production flat for 2022 at the same time as raising salaries amid a tight labour market and unionisation efforts. Nasdaq futures fall on the news. And cost of living crisis, Boris Johnson's government prepares to set out fresh support for struggling Britons. That's as he attempts to move on from a damning report into illegal parties in Downing Street. Let's check in then on your markets. Just a few seconds away from the open, of course. The futures pointing lower. We are digesting the Fed minutes. June and July, there's some certainty now starting to be baked in around the trajectory for Fed hikes. June and July is what was articulated in those minutes, though there is some suggestion from the minutes that maybe you pause and reflect after that to adjust to the data that continues to come in. And some of that data weaker when you look at things like new home sales in the United States. Certainly that is a suggestion from the Fed's Bostic. That came out on Monday, his comments there, but suggesting that maybe you start to pause. Also reflecting what we heard from the Chinese Premier, Li Keqiang, really starting to see senses of panic stations from Chinese officials and saying that maybe in some parts of the economy, this is the Premier, it is looking worse than 2020. In terms of how the markets are shaping up then in the first few seconds of this open, in fact, you're seeing gains of 0.3% in Spain on the Spanish IBEX. The DAX over in Germany is gaining 0.2%. The CAC 40 is flat, range-bound, and a similar picture of the FTSE 100. We'll check in on some of the basic resources because iron ore is off. The last time I looked, below 130 per ounce. We're looking at that, the implications of that concern around the Chinese demand for commodities. Let's move it on, check how things are playing out cross-asset. We continue to focus on what's happening within the Nasdaq, of course, on concerns about Nvidia. They pointed to supply chain risks in China and, of course, the impacts of Russia as well. And then that story around Apple keeping their production, we are reporting, at 220 million. Some forecasts had it at 240 million, and raising wages, in some cases, by around 10%. The Nasdaq futures lower then by 0.4% as investors digest what is happening within the tech space. Euro-dollar currently at 106, not a lot of movement there for the single currency. Ruble, we continue to focus on this. There's the extraordinary central bank meeting happening in the next 30 minutes or so in Russia. There's an expectation that maybe you see a cut to rates, concern from officials in Russia, in Moscow, about just how strong the ruble has become just in the last few months. At 60 currently is what you're looking at, just a little bit weaker by around 0.3%. And then we're looking at iron ore as well, still below 120, 130 per ounce, per ton, I should say, 129 currently for iron ore, down 1.7% again on those concerns about the demand out of China. Premier Li Keqiang certainly sounding a warning, and Trivium China, based in Beijing, saying that maybe they are now starting to lay the groundwork for ditching that growth target for the year. Okay, let's get over to Bloomberg's MLive managing editor, Mark Cudmore. Mark, you've been looking at Latin American outperformance. What are the details?
Yeah, good morning, Tom. I think one of the really exciting risk-reward trades of this year has actually been trading the relative value within emerging markets. For the last 10 years or so, emerging markets has really just been one trade, and so you kind of had a view about which one might kind of outperform slightly, but they all move in the same direction. Not so this year. It's a very, very different story in each of the major EM regions. So this is the year-to-date returns of the yellow line is the MSCI LATAM index, up 13% year-to-date. At one point, it was up about 30% year-to-date. And the MSCI Asian index is down 19% year-to-date, and MSCI Europe, the blue line, is down 24% year-to-date. Now, what's really interesting is They're obviously big macro factors, but this year they're trading on three very, very separate themes. So Latin America is trading on the idea of this kind of surge in food prices in particular, but generally commodity strength, and it's really, really benefiting from that. It also is way ahead of most of the rest of the world on its hiking cycle, which gave it a little bit of a head start as the rest of the world woke up to the inflation problem. I think that outperformance can continue overall, maybe not as much as it has done, but I think generally Latin America can do well. Now you've got Asia next at minus 19%. Now, my team think the signaling this week from Li Keqiang is really, really important, and it actually is a notable difference from the last couple of months. It doesn't mean we turn around in the next 48 hours or so, but they think the turning point is coming in China, and that means that'll boost the whole Asia region. So Asia might start doing better. Finally, the bottom index, European, EMEA, Europe, Middle East, and Africa. This is very, very related to what happens in Russia, Ukraine, and I have no informed view on what happens there. But what I would say is that fundamentally, it is very discounted if there is peace there. So it really does hinge on any developments in Russia, Ukraine, but if there's any positive news, that can really roar. The summary is, I think all three of them can do better in the next 6 months. They will still remain trading on separate themes, but I think all of them might trade a little bit more positively.
Fascinating breakdown of what's happening in the EM space across those equities, and further upside, as you say, possibly for LATAM equities that have outperformed. Mark Cudmore, Bloomberg's MLive Managing Editor, thank you for that analysis. Let's get more now with the market drivers with MLive Currency and rate strategist Ven Ram. Ven, I know you've been looking at the NASDAQ, of course, and investors within that index, particularly weighing up what's happening with Apple, but also the concerns around NVIDIA and the supply chain woes out of China. You say that the NASDAQ still has some way to go, hasn't reached the bottom yet. Just outline that view.
Morning, Tom. In the past 10, 12 years, there's been a pretty strong correlation between investment-grade credit and NASDAQ. Essentially, the spread between the earnings yield on NASDAQ 100 and the rate on the BAA credit, as seen by Moody's, has been somewhere between in the region of 20 to 50 basis points. Where are we at the moment? At the moment, we are minus 45 basis points. So the earnings yield on stocks has got to shift higher to make good that mean reversion theme that's been pretty strong in the past 10, 12 years. If you take that math a step forward, what we get is a decline of about 9% from current levels on NASDAQ, taking the NASDAQ 100 index all the way down to somewhere in the region of 10,700 levels. And that also means that S&P 500 is also going to fall somewhere towards 4,500 thereabouts.
Okay, so maybe further pain for the S&P 500 and the NASDAQ. The futures for the NASDAQ basically pointing lower by 0.4% in today's session. Ven Ram, what do you make of the Fed minutes as well? It seems like we got some agreement, consensus around June and July and 50 basis points there. And then some murky picture, arguably, around whether or not there is a view now that you pause after those two rate hikes. And then, of course, for me, what stood out as well was the downgrades in terms of those forecasts on inflation for 2023 and 2024. What stood out for you?
Well, I don't think we got too much by way of new information. It's clear from the FOMC minutes that they want to take the rate forward to neutral policy as soon as they can, and we also know they want to get to possibly restrictive policy when it becomes appropriate. In the past couple of weeks, we have come off about 15 basis points on the Fed pricing for the remainder of the year. But regardless of the soft patch of data that we have seen of late, you mentioned earlier on the show, the housing data and yesterday's durables data, the Fed is going to keep going simply because I don't think this inflation can be wished away. Earlier this week, we had the RBNZ meeting, and they raised rates by 50 basis points and flagged a lot more to come. Now, why is that important in the context of Fed? Because the RBNZ started raising rates much sooner than anyone else, apart from Norges Bank, and they're still having to go. And if anything, the inflation expectations in New Zealand are much higher now than they were when the RBNZ started its rate hiking campaign. If that's the case in the small open economy in New Zealand, you can imagine what inflationary pressures are going to be like in the US in a much bigger economy. And therefore, I don't think this inflation is going to be can be wished away. And therefore, the Fed is going to have to raise rates, whether or not there is soft patch of data. I know that the economy is going to somewhat pay the price for the Fed rate hikes, but that's not going to stop the Fed.
Ven Ram, would then that suggest that the calls that you're going to start to see a bond market, a bull bond market now, that they're premature?
Well, I do think that a bull. We have seen the top in rates for sure. particularly at the front end. But I do think that there's going to be a bit of a lull for the time being. And then we could see a bond bull market, but not now, because the Fed is still, after all, going to be raising rates.
Okay, Bloomberg's M Live strategist Ven Ram on all things Fed minutes, and of course, as well, his prediction, you're going to see further downside for the NASDAQ, given some of the historical references. Coming up, after a surge in the ruble, Russia's central bank is due to hold an unscheduled policy meeting, and we await the Turkish central bank's decision too. We will have more on those decisions next. This is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open this Thursday morning. We are 11 minutes into your European trading day, and equity markets here in Europe performing slightly better than the futures had suggested, up 0.2%, weighing up what we've been seeing from China, hearing from Premier Li Keqiang, his warnings about the state of the economy there. On the tech side, of course, warnings from Nvidia, Apple also remaining flat in terms of their demand, but the FOMC arguably offering a little clarity when it comes to June, July, and downgrading their forecast for inflation for 2023 and 2024. Future stateside, though, still pointing lower by about 0.1% for the S&P E-minis. Let's get back to what's happening on the geopolitical front then, and Russia racing to stem a rally in the ruble as it bites into exports. The country's central bank is expected to accelerate interest rate cuts at an unscheduled policy meeting today. Meanwhile, Turkey's central bank will announce its rates decision later, but its unorthodox monetary policy means it's not likely to join the EM rate hiking party anytime soon, even with inflation at 70% year on year. Joining us now is Bloomberg Managing Editor for Energy and Emerging Markets, Justin Carrigan. Justin, let's start then with Russia. Why has Russia decided to hold this emergency meeting today? What are we likely to see?
We're likely to see a substantial cut in interest rates today, Tom. This announcement yesterday that they'll hold an emergency meeting can only mean that, and we're looking to cut from anything from 300 to 700 basis points. We've seen one forecast, putting rates back pretty much where they were on the eve of the invasion of Ukraine. What we've seen in recent weeks is this enormous strength now kicking into the ruble, largely on the back of rising commodity prices and the extraordinary foreign earnings that Russia has enjoyed as a result of rising commodity prices. And Nabulina, now the central bank governor, probably given the clearance now to cut rates, as I say, back to the more reasonable levels they were. But of course, this is a sign that things are not all good in Russia, and it's really reached the pain point as far as the ruble strength is concerned. Exporters now starting to complain.
Currently, the ruble lower by about 0.1%, but the run-up has been remarkable, as you say, since those restrictions were put in place. Do we expect to see any capital control relaxation announced as well?
There is talk that we might see a few little trimmings at the margins, a little bit of pullback on that account. There was on the most recent rate cuts that we've seen since that increase. We've seen 300 basis point cuts since February, and we'll probably see a similar type of trimming of the capital controls as well to add to that easiness that the Russian central bank is looking for.
And when it comes to Turkey, Justin, is there any sense at all that Erdogan and his central bank are reconsidering this unorthodox policy, given that increase in inflation, that 70% jump in prices?
Yeah, it's a sort of mirror image of what's going on in Russia at a time when everyone is looking to raise interest rates. Russia is cutting for the reasons I've just explained, and Turkey is probably one of those countries that really should jack up interest rates considerably now. As you said earlier, 70% inflation, and yet there's really no sign, I'm afraid, Tom, that Erdogan wants to sort of move that policy that he stuck to very rigidly and has kept the central bank very much under his control. He wants to see lower rates, or rather, doesn't want to see raises, so we probably won't see anything today for a while. We haven't seen anything all year while inflation goes through the roof. And he'll want to keep the growth picture going at the cost of inflation. He wants to keep the growth picture so that the economy can at least grow and keep people to a certain degree happy, so that he's in a good position come the elections next year.
Okay, the politics, of course, front and centre for Erdogan of Turkey as we look ahead to that Turkish central bank decision. Thank you. That is our Bloomberg Managing Editor for Energy and Emerging Markets, looking at the Russian central bank decision coming up later today, and Turkey as well. Let's get now to Fiona Boll, Global Head of Commodities at S&P Dow Jones Indices, to unpack what is happening across the global commodities market as we weigh up the geopolitics, of course. Fiona, good morning. Thank you for joining us. Let's start with Russia then, and partly underpinning the strength that we've seen in the ruble is that continued demand, of course, for oil and gas out of Russia, despite attempts by some to restrict and reduce that demand. We still don't have consensus in Europe on a full embargo of Russian oil. Has that eventuality, though, been priced into the markets?
Thanks for having me, Tom. Look, I think it's uncertain whether that's been priced into the markets just yet. I think the overall view of all but maybe one or two of the European states is that they would like some type of embargo. But turning off the taps, is going to be a real challenge, and a real challenge, on top of the existing really tight supply that we're seeing in energy and commodity markets more generally.
And Fiona, in the past when we've spoken to you, you've been really great at kind of unpacking the industrial demand in Europe for Russian gas. How has that modulated? How has that evolved since we last spoke to you?
Look, I'm glad I'm not running a manufacturing plant in Europe. I think the challenges are immense. I'm not sure it's changed significantly over the last couple of months. Gas prices have been incredibly volatile. Prices did come off slightly, but we've seen them move back higher. And really that requirement to sort of shift production processes, either to bring in LNG, to change to alternative supply, to mix up the production system. It's an enormous challenge for the big industrial players in Europe, and I don't think that's changed, unfortunately, for them.
And on the soft commodities front, particularly around agricultural commodities, there's been a lot of discussion at the World Economic Forum in Davos, concern about rising food prices. Where are we in the disruption of those agricultural commodities? Are you seeing any rebalancing at all?
Look, I mean, we're in a real pickle. I mean, the S&P GSCI Agriculture Index up, about 50% year to date, driven largely by staples like corn, like wheat. We think that a country like the Ukraine, the breadbasket of Europe, they were sending out before the war 6 million tonnes a month of grain and oilseeds out of Odessa. They're now sending none. They're sending maybe 1 million tonnes by rail. So it's an enormous risk to the global food situation.
That's a remarkable statistic, isn't it? We are hearing from the Russians, and of course the Ukrainians pointed to some skepticism on this, but the Russians suggesting that they may help ease that blockade of some of those ports. If that were to happen, how long would it take for those wheat supplies out of those ports to start to normalise, do you think?
It's a very difficult question. I mean, let's assume that there can be an agreement made, but I'm still overly sceptical about, who's willing to send ships into those ports, who's willing to insure those ships, who's willing to insure the product on those ships, and how do we guarantee the safe passage of those agricultural commodities. But, they've got about 20 million metric tonnes of grain sitting in storage in Ukraine. And it would be wonderful if we could find a way of getting that out safely.
Fiona, our team in Asia are pointing to the fact that rice prices have remained relatively subdued, that there is surplus rice on the market. When it comes to Asia, is there an ability there to adjust that demand from wheat to rice? And will that offset some of the pressures that we're seeing?
I think at the margin that will offset, but I think, like Europe and North America, in Asia, we're still seeing the impact of higher vegetable oil prices. We've seen that with the moves to restrict palm oil exports. So, what we're really seeing is just the interconnectedness of these commodity markets.
Okay, Fiona Boll, Global Head of Commodities at S&P Dow Jones Indices. Thank you on the complexities of ending any embargo on those Ukrainian ports and the disruption that we're seeing across the agricultural commodities market and the implications it could for food prices around the world. Right, coming up, in a dramatic shift, Scott Minard says he expects Bitcoin to fall to $8,000. It's currently trading around $29,000. We will have more on that conversation next. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I was an early believer in crypto. I remember looking into Bitcoin first when it was at $100. I did a presentation up at the Nantucket Project on crypto, how to deal with it, how to invest in it. And I really thought that, this is a viable investment vehicle. But one of my big concerns is that no one has cracked the paradigm in crypto. And when I say they cracked the paradigm, its use as a currency, right? As you know, the definition of a currency is that it's a medium of exchange, it's a store of value, it's a unit of account.
Not the last 90 days.
Not at all. And so we've learned that none of this stuff, stable coins, the whole bit, everything is suspect.
You're a really, really bright guy. I want you to explain the divide between Alan Auer at the Bank of International Settlements, who owns a high ground with Ken Rogoff at Harvard, on the study of Bitcoin and the entire scarcity, the derived scarcity of it, with the community of Bitcoin that just seems miles apart, and they won't read Alan Auer.
Right. No, well, I think, look, because Bitcoin and any cryptocurrency at this point has not really established itself as a credible institutional investment, right? It's really become the market of a bunch of yahoos and backwaters, and I know I'm already going to be plastered on Twitter now for what I just said.
Good luck when you get back to your desk.
Yeah, exactly.
Lisa's cell phone just melted down over there.
Exactly. But when you consider we have 19,000 digital currencies or cryptos or whatever we want to call them today, most of them are junk. They don't make any sense whatsoever.
Do you have any crypto asset investments?
We did. We had Bitcoin. We bought it around 20,000. We sold it at 40,000. And I really thought we were going to correct. After we got to 60, I thought we would correct to 30. We got there. And then I began to look at it and say, why are we stopping here? And so my latest work, which is entirely technical because there's nothing else to look at here, is that we were probably going to hit $8,000 before.
What was that number?
8,000 until we totally flush
so you
out
have
what's
no
going
more
on.
Holdings?
No.
Okay,
I mean, if I were, I'd be short.
Okay, that was Scott Minerd from Guggenheim Partners with that $8,000 call on Bitcoin, currently trading at around $29,000. Let's check in on some of the individual movers briefly. One of the standouts, BT, falling on the back of news that the UK government, under a national security law, is reassessing, reviewing the increase in a stake by Altice in this company from around 12% to 18%. So the stock hit on the back of that, down almost 5%. Allegro, this is a Polish e-commerce company, coming up with better results, but warning on inflation, down 0.9%. And ST Micro, looking at electronic space, the semiconductor space, on the back of that warning from NVIDIA about supply chains out of China and Russia. Plenty more coming up. Stay with us. This is Bloomberg.
end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Aggressive policy. Fed minutes show agreement on the need for half-point hikes in June and July, but questions remain over the path for rates later in the year. Stagflation signs at Apple. The iPhone maker announces that it is keeping production flat for 2022 at the same time as raising salaries amid a tight labor market and unionization efforts. Nasdaq futures fall on the news. And cost of living crisis. Boris Johnson's government prepares to set out fresh support for struggling Britons as he attempts to move on from a damning report into illegal parties in Downing Street. We have a redhead crossing the terminal. This is the extraordinary meeting by the Russian central bank, cutting its key rate to 11%. The estimates were for a cut to 11.5%, so a deeper cut than the estimates. Again, the Russian central bank cutting the key rate to 11%. We'll check in on the ruble. There's been concern amongst officials within Moscow about the ruble's strength after these capital controls were imposed and rates were hiked on the back of that. You're currently seeing the US dollar ruble, you're looking at 60.89. You're actually seeing some strength on the ruble on the back of that, gaining around 1% on the back of that move. The Bank of Russia to consider further rate cuts at the next meetings. So the Bank of Russia to consider further rate cuts at next meetings. And again, the Bank of Russia cutting its key rate to 11%. It is also saying that the ruble maintains losses. You're seeing losses after that rate decision. You are now looking at the ruble at 6.92. The Bank of Russia saying that inflation is slowing down in recent weeks. We will check in on the broader markets as well. So we just kind of weigh up what is happening there. You're actually seeing, of course, on the back of this, you're seeing ruble weakness, I should say, down by more than 1% on the back of that deeper than expected cut by the Central Bank of Russia. Here's what's happening across your European equity markets then. You're seeing gains of 0.2%. The DAX is adding 56 points. The FTSE 100 is range bound. Basic resources, a bit of drag there. Pressure on iron ore and other commodities on the back and concern about China. Premier Li Keqiang sounding the warning signals on the prospects for growth. And in terms of the Fed minutes as well, digesting those 2 rate hikes, June and July, seems to be the consensus. But what happens after that is still a question mark. And within technology, concerns about the outlook when it comes to supply chains out of China, highlighted by NVIDIA, Apple as well, suggesting that they are looking at 220 million iPhones, less than many had forecasts for the year. Okay, let's check in on some of the individual sectors then. Energy gaining about 0.8 followed by consumer products up 0.6%. 4 or 5 sectors currently in the red, including utilities, tech, not a big surprise there, given the read across from Nvidia, and banks also down just by about 0.1%. Future stateside, you're looking at gains of about 0.1% for the S&P E-minis. The Nasdaq futures down by 0.2%. Okay, let's get to another one of our top interviews from Davos now with Francine Lacroix. Francine.
Thank you so much, Tom, and good morning. Day 4 from Davos. We're all exhausted, we're all on caffeine, but it has been extremely productive. I am extremely also grateful for Rashid Mohammed Rashid, the Al-Sara investment chairman, now to join us. He's the chairman of Valentino in a previous life. He was also a trade minister. So, Mr. Rashid, it's amazing actually how the kind of transformation that you've had. I used to interview here in Davos years ago in a completely different capacity.
True.
Is luxury and fashion fun? Or is it actually just as hard work as being in government, looking at trade?
Extremely fun, extremely fun. Nothing to do with, all the world's problems that we are faced today in trade, yeah. It's very different, yeah.
It is very different because what's incredible is that you can actually pass on some of the higher, costs because of inflation, textiles, even shipping, to your consumer without any impact. Is this the power of the Valentino brand, or is it that when you're the elite buying these clothes, you're not price sensitive?
Well, Valentino is an amazing brand, so we definitely have a lot of attraction, and we have a lot of very loyal followers. But at the same time, I think the luxury industry in general have seen in the last few years a very significant increase, because there is no doubt that with the pandemic and the way that money have been spent in the markets, rich got richer. So there is a lot of really money within a segment of the population, and these people are trying more and more to spend the money on luxury goods. With the pandemic, as we know, countries have been throwing money in the market. Most of this money ended up with rich people. Rich people now, after the pandemic, they are aware that they are going to die. They want to spend the money on luxury. And more exclusive things are even more and more in demand at the moment.
So haute couture and things like that? I mean, gowns that cost £10,000?
The most exclusive brands and the most powerful brands in terms of luxury, they have seen growth of 40–50% in the last 2 years. Valentino have been among those brands, and we have seen the more expensive products are even more in attraction than anything else. Yeah.
Are you missing the Chinese consumer? If you look at the heavy lockdowns that we've seen.
Yes. Well, China is an amazing story in terms of luxury, because they went from 0 to almost 40% for all the Chinese consumption globally, in China and outside of China. And that is almost equivalent to the US and Europe combined. But with the pandemic, the Chinese consumers moved into China. And that consumption moved outside of the European and the American market totally to China. 2020, there have been a lot of activity in China. 21 have been a very mixed year, because we have seen the lockdown. Now in 2022, there is a big question mark about the Chinese market, because until today, almost 80% of the population in a lockdown situation. And that really is a big issue for the luxury business, because we are not very clear about what is going to be the rest of the year looking like. Yeah.
So can that demand shift actually from U.S. consumers? Can the Middle East absorb some of that demand, or is it just lost?
The U.S. is booming as a market for luxury. It is the fastest growing market in the last 2 years now, and we feel that this is going to continue. Europe is picking up. Middle East is becoming a very, very active market, again, because the locals have been buying in the Middle East instead of coming to Europe. Latin America, Brazil is also really becoming a very strong market. So as I said, we are seeing more and more local markets. China is a question mark, but America is leading at this stage.
Are you after M&A targets and devaluations?
We are definitely.
Fashion houses?
For sure. I mean, there is always an appetite to look after very, very special brands, because we are very focused on luxury. And really, the essence of luxury is the power of the brands. I mean, luxury is a very special business, and it is very emotional, and it has to do with a lot of history and a lot of emotional powers around it. And we know that this is very much located in countries like Italy and France, where over many, many years they have been able to monopolize.
Do you have a dream brand? Is it a stuffy old brand that you can, with the right design, try to revolutionize?
Yes, we do, but I cannot tell you.
You
which
cannot
ones.
tell. Okay, you'll have to tell me as an exclusive when you buy it,
Sure,
maybe.
sure.
Do you want to rival the big French conglomerates, the LVMH and Kering?
Well, LVMH and Kering have been a very successful, of course, example of creating a platform of companies and definitely created an amazing, evolution in the luxury market. In Mayhoola, we are trying really to have a group of companies. We are not going to do the same thing because we are very much depending on keeping companies with their own DNA. So Valentino, as an Italian company, we want to keep it an Italian company. And we have done an amazing job with Valentino, taking it from 300 million to over 1.5 billion. And it has been a great success story. And we are repeating that, and we would like to repeat it more with keeping it very locally. Yeah.
Do you think you'd be able to actually buy companies at a cheaper price because of COVID? So if you're buying a luxury company that used to do a lot of formal wear, this is not the way we dress anymore.
Yes.
Because COVID also put a lot of pressure on supply chains. Do you think you can scoop up a bargain?
Well, yes and no. Definitely there is a pressure that will happen in terms of the market. But as I mentioned, when you look for special luxury companies, they have this very special DNA in terms of their brand. And if you really can find them and access them, the value is not the most important factor when you acquire them. So maybe if they are available in the market, you will overpay a little bit, but that's worth it in the long term. Yeah.
How do you make that special DNA? We were just talking, you have Zendaya as one of your campaign figures.
Yes.
You have a pretty, force of nature designer that has managed to transform this brand into something desirable.
Well, Valentino is an amazing brand. Mr. Valentino Garavani, of course, created a dream more than 60 years ago. And when we acquired the company, we had the challenge to move it into the new generation. And that is really the power now and the challenge, that you take something very, very historical and very valuable and very iconic, but you can also make the transformation to the young generation and what is called Gen Zs and all the... So we have been able, with our designer, who's an amazing designer, Pier Paolo, to introduce products like sneakers, which have not been in luxury in 2014. Accessories have been also very much into the attraction of young people, but also being able to have a conversation with this generation. And here comes Zendaya. Zendaya is an amazing, person that can really create the link between the brand and the new generation. Yeah.
Do you think COVID has changed the way we dress? So less formal wear?
Sure, for sure. There is, and by the way, the trend was even before COVID, but COVID accelerated it even more. People less formal and more casual. This is happening everywhere. Yeah.
Mr. Rashid, thank you so much for joining us on TV today. Rashid Mohammed Rashid, they're the El Sara investment chairman, the chairman of Valentino, Tom. And with that, I'm going to send it back to you.
Great stuff, Francine. Thank you very much indeed. Okay, let's get the Bloomberg Business Flash now with Alice Atkins. Alice.
Morning, Tom. Apple is planning to keep iPhone production roughly flat in 2022, a conservative stance as the year turns increasingly challenging for the smartphone industry. According to people familiar with its projections, the company is asking suppliers to assemble roughly 220 million iPhones as the worst inflation in decades, a war in Ukraine, and supply chain turmoil all threaten to weigh on sales. Apple declined to comment on the outlook, which could change depending on the economy and supply constraints in the coming months. Elon Musk is dropping plans to partially fund his purchase of Twitter with a margin loan tied to his Tesla stake. An exchange filing reveals he's increasing the size of the deal's equity component to $33.5 billion. The new structure could reduce the risk of the deal for both Musk and his lenders, particularly given the recent slide in Tesla's stock price. Nvidia tumbled in late trade after saying sales for the current quarter were likely to miss projections. Revenue is now expected to be around $8.1 billion. Supply chain issues in China and the war in Ukraine are both weighing on its bottom line. But revenue from data center chips grew 83% in the first quarter, which was above estimates. Shares of Snowflake are lower in after-hours trading. The software company that helps businesses organize data in the cloud gave a sales forecast that signaled slower growth for the second straight quarter. That's raising concerns about the pace of corporate spending on information technology. That's your Bloomberg Business Flash. Tom?
Alice, thank you very much indeed. Okay, coming up, cost of living crisis. Boris Johnson's government will set out new support measures. That's going to be today as the Partygate scandal continues to hang over the Prime Minister. We'll get the key details next. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Welcome back to the Open. We are 45 minutes into the European trading day. You've had a turnaround in sentiment. You're seeing gains of 0.4% across European equities and future stateside as well. The S&P E-mini is now pointing up 0.3%. The Nasdaq futures also up just 0.1%. When it comes to Russia, just recapping what we saw from the central bank there, the emergency meeting was pulled forward to today, and a deeper cut to interest rates than many had forecast, from 14% to 11%. You've seen weakness in the ruble of about 0.5% on the back of that, and gains for the benchmark, the IMOEX index, the MOEX index in Moscow, gaining 1.8% on the back of that decision. Inflation seen at around 17.5% and signalling further rate cuts in the future from the Russian central bank. Let's get to all things UK now, with Boris Johnson's government expected to outline fresh support for people struggling with a record squeeze in living costs later today. The Prime Minister is seeking to move on from the long-running Partygate scandal after the Sue Gray report held him responsible for staff gatherings during COVID lockdowns.
I'm humbled by what has happened, and I renew my wholehearted apology for the gathering in the Cabinet room on the 19th of June 2020, my birthday, for which I received a fixed penalty notice.
Okay, joining us now is Lizzie Burden, our economy and government reporter. Lizzie, what are we expecting then from Rishi Sunak, the Chancellor's statement later today?
Well, Sunak, of course, has had a difficult couple of months ever since that March budget, but he's been criticised for not doing enough to help the poorest households through the cost of living crisis. So this is the answer to that. On Friday, the chief economist of the Bank of England, Hugh Pill, said the ball is in the Treasury's court because the bank has hiked rates 4 times now. You've also had the energy regulator Ofgem saying that it's going to increase the energy price cap 42% likely in October. So this is the answer, a multi-billion-pound package expected to ease the cost of living crisis, at least partly financed by a windfall tax on energy companies. But whatever Sunak announces today, it should be seen as a reluctant response to pressure rather than a proactive act of generosity. And Sunak will be very aware that he's going to be expected to do even more at his October budget later in the year.
So, a reluctant Chancellor, how much of this is about the politics as well, about moving things on from the Partygate scandal? What was the focus on Boris Johnson yesterday?
Yeah, of course, no coincidence that this comes a day after that. This is an attempt to draw a line under the Sue Gray report, which it revealed some details that were frankly humiliating for the government. You had wine spilled on the walls because people were so drunk, people being rude to the cleaners, vomiting in some instances in the top of government. And yet the Prime Minister says he takes full responsibility for Partygate, but he didn't resign. And privately, members of the Tory party say that it was a damp squib, there was no smoking gun, and that there aren't enough numbers to trigger a vote of no confidence in the Prime Minister. So it seems that the greased piglet, as his critics call him, has escaped another time.
What a lovely analogy, the greased piglet analogy from Lizzie Burden there. Thank you. Looking ahead to the Chancellor Rishi Sunak's statement later today. Let's get to all things China then. Premier Li Keqiang giving a dire warning about the economic risks in that country. Let's get to Enda Curran to break down what we've been hearing. Enda, how stark is this warning then from the Chinese Premier?
Pretty stark, Tom. It speaks to a new sense of urgency from the government, a recognition of how much damage has been done to the economy by COVID-0. And of course, it suggests that the economy hasn't yet bottomed. There had been a feeling that perhaps things had hit a trough in April, but clearly the month of May hasn't seen much of an acceleration now. We didn't get any major new measures from Premier Li. He made these comments in an unusual meeting in remarks to thousands of local government and provincial government level officials. But he did tell them to get on with the work of supporting the economy, of using the measures that the State Council have already approved, such as tax rebates for companies and more spending on infrastructure projects. But there was no hint of any deviation from COVID-0, no hint of any kind of massive increase in the stimulus coming down the pipelines either. It all feels a little bit like treading the water, for now at least.
Okay, Enda Curran, Chief Asia Economics Correspondent on the latest when it comes to Premier Li Keqiang and his warnings about the economic outlook for China. Coming up, Apple pays. The company will boost compensation for US employees. More on the drivers behind the move. And a Bloomberg scoop about iPhone production plans. That is next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We are 53 minutes into the European trading day. You're seeing gains of 0.4% across European equities, and futures stateside have turned around modestly between a tenth and 0.3%. Let's get to all things Apple then. A big day for technology in terms of the news flow. Apple raising salaries for workers in the US in response to rising inflation and a tightening labor market. In a statement, the company said it is expanding the overall compensation budget this year. It is not the only headwind for the company. We've had a Bloomberg scoop this morning that the company is keeping iPhone production flat as the smartphone maker gets tougher. Joining us now is Bloomberg Quick Take correspondent Alex Webb. Alex, let's start with the Apple Pay then, an increase of around 10%. And this points to that liquidity, or I should say the tightness of the labor market, and the fact they're having to spend more to keep and attract employees.
Absolutely, and like Apple can afford to do that. It's interesting because a lot of its stores, it doesn't necessarily look at how profitable each store is. The stores are really considered a way for people to go in, test out devices, and then they can perhaps buy them online later.
Is it for staff in stores rather than engineers?
Well, the understanding is it's both, but of course the biggest number of employees it has is in those stores. So you have two things really. You've got this unionization threat, which is something which has been happening across a bunch of tech companies, not least Amazon. So there's a suspicion this is sort of trying to fend that off and say, well, we pay you pretty well already. There's also the threat of people hiring both the engineers, but also from those stores. You lose those employees, but there is a huge push from Facebook, for instance, that has been maybe tapered a little bit recently to hire engineers for Apple as they accelerate their push into hardware.
So it's about retention as well as attraction of talent at Apple. When it comes to the production forecast that we're seeing, reporting out of China around the 220 million iPhones, just put that into context for us.
So we should say, first of all, Apple doesn't break out any longer how many iPhones it sells. So a lot of this is we're looking at estimates of what the market expects. And the market was expecting about 240 million iPhones in the next cycle. Our colleagues are reporting that they're going to manufacture about 220 million. We also do sometimes see that Apple sets a kind of upper limit of how many they want, and they reverse back from that if they don't sell as many. So it does suggest that there is a certain amount of conservatism about how many they expect to sell, but there's a push and a pull effect here. You've got like fewer people perhaps willing to buy iPhones because of inflation and just tightening finances, but there are also supply chain constraints which might make it harder to make as many as you wanted as well.
The other big story, you've been following the twists and turns of this, is Elon Musk's bid for Twitter. How has that evolved in terms of the financing, and what did we get from the AGM yesterday?
So they issued a release which said that, or Elon Musk issued a statement which said that they're no longer going to be banking on a margin loan against his Tesla stock. That does mean, though, there's a bit of a hole to how he's going to fund it. Bloomberg Intelligence estimates between 12 and 14 billion how much he still needs to find. The question is, does that mean actually that he needs a lower price? That he's looked at the way that share prices across social media stocks have been tumbling as advertising has been tamped back because, again, of inflation.
And it's still trading below that initial offer price.
Still trading well below that price, and of course not helped by his statements which say maybe I won't be able to buy Twitter. But that of course helps his negotiating power. That if Twitter is trading lower, then it's easier to go to the board and say, well, I think there should be a lower price. Even though he's locked in this one, so there might be some penalties.
Alex Webb, as always, excellent on all things tech, particularly Apple and Twitter and Elon Musk's evolving bid. Thank you. That is it for the European Market Open. Surveillance early edition is up next. Your markets have turned around, up 0.4% in Europe, and S&P 500 looking at gains now. The futures of 0.3%. The Nasdaq futures brushing off just marginally the concerns about Nvidia and Apple, gaining 0.2%. US markets ended higher yesterday on the back of those Fed minutes. Plenty more coming up. Stay with us. This is Bloomberg.
Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We were probably going to hit $8,000 before. What was that number? 8,000 until we totally flush
So you
out
have
what's
no
going
more
on.
holdings?
No.
Okay,
I mean,
well-
if I were, I'd be short.
Their capacity is 2% or lower. In a market of 100 million barrels, that is very low.
It's clear from what Sue Gray has had to say that some of these gatherings then went on far longer than was necessary. And they were clearly in breach of the rules, and they fell foul of the rules.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone. Welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, here's what's coming up on today's program. Aggressive policy. Fed minutes show agreement on the need for half-point hikes in June and July, but questions remain over the path for rates later in the year. Stagflation signs at Apple. The iPhone maker announces that it is keeping production flat for 2022 at the same time as raising salaries amid a tight labor market and unionization efforts. Well, NASDAQ futures fall on the news. Plus, must-watch interviews this hour live from the World Economic Forum in Davos. Our guests include the Moderna Chief Executive, Stéphane Bancel, and of course, Trade Minister of the UAE. But first, let's check in on the markets. And I have to say, it's never dull being in Davos, certainly not being on the rooftop of the Congress Center. We heard sheep, we heard helicopters, we also heard the bells tolling in the church behind us. Stocks mixed today, traders again weighing the Federal Reserve minutes that struck a less hawkish note with downbeat remarks on China's economy by Premier Li Keqiang. If you look at futures, they're pretty much a bit volatile. European stocks gaining some 0.4%. It's really the energy shares leading this advance on the stock 600, oil rising, technology shares though underperforming, and then treasuries advancing and the dollar steady. This is a picture across the board when you look at the European map. And again, it's extremely interesting. Things then change as we go on throughout the day. But if you're a country that is very exposed to commodities and oil rich, you're probably doing better than some others. Today, I would point to two great interviews we've had so far. We had an exclusive interview with the Saudi Aramco chair. We'll bring you all the headlines from that. And then we also spoke to the Rio Tinto chief executive a short while ago. I guess investors now taking some comfort from the Fed minutes that didn't show an even more aggressive path being mapped to tackle this inflation. Now let's get to another conversation here at the World Economic Forum. I'm delighted to be joined now by the UAE Trade Minister, Thani bin Ahmed Al Zawoodi. Minister, thank you for joining us. I mean, there's a lot going on, and you're negotiating trade deals. Is the world coming together? Are we going to have deals, or are we further deglobalizing?
Well, thank you so much for the invitation. So the supply chain and the trade were dominating most of the discussion throughout the Davos. it's a big issue. We saw it through the pandemics and now with the geopolitical matters. And the world has to get together if we really want to cool down this high spikes on the prices. Every commodity that is reaching to the parts of the world. Are we going to reach a deal? It seems to be very difficult from the discussions. No. Every countries and nations are putting their interests on the table, but we at the UAE, we're taking different directions. We're opening up and we're continuing signing deals with countries, so we continue with the same globalization definitions that we know before.
So, Minister, how many deals are you expecting to sign? Actually, are there specific sectors right now that could benefit from multilateral or unilateral deals?
The key sector nowadays is the logistics, because we want to ensure that the smooth commodities are moving from one place to the other. But throughout the discussion here and throughout the Davos and even the outcomes which we're going to take forward, how we're going to ensure the implementation of the mega trade deals that has been signed, like the RCEP, for example, and how we're ensuring that is going to be expediting having 30% of the global world in one block. As a UAE, we signed the first comprehensive economic partnership agreements just a few months ago. It got into effect earlier this month. We have now an access to 1.4 billion markets. We're signing one next week with Israel, and we're going to continue doing so.
We spoke to a number of very big players in, of course, the oil and gas space. With energy so elevated and the oil price so advantageous, does it make it more difficult for the UAE to diversify away from oil?
Well, the diversification decision has been taken decades ago, so it's not new for us. And this diversification process went through the different waves of prices going up and down throughout the last 15 years at least, and we managed to move quickly on our plan. The minute that you have a goal and you have a systematic approach, you're going to do it. And that's what exactly we're doing in our preparation for the upcoming 50 years through different projects that we launched. Openness, liberalizations, continuing investing in industries, and attraction of the investments to the country.
So nothing's changed?
Nothing changed, and we're going to continue with the same plan, diversifications and knowledge-based economy. Knowledge-based economy, the human capital is the key aspects of this movement.
Are there certain sectors, I mean, when you look at diversification, we're talking about logistics, but is it logistics can really take a bulk of economic growth going forward?
We do have an excellent logistic infrastructure, and we're connected to at least 250 ports and almost 400 cities around the world. Are we going to take this forward? Absolutely. The investment is going to be continued, and through the different agreements, we're going to ensure that we're bringing the efficiency into the supply chain that we're having. The other sectors which we're keen on, for sure, we're going to continue with the conventional sectors, the tourism, the petrochemical investments, health, food, etc. But at the same time, we're going to focus on the futuristic sectors, fintech, the technology, advanced science, which we saw the importance of those sectors during the pandemic and during the last few months.
I mean, of course, it's extremely difficult to move things from A to B because of inflation, because of shipping. Are you expecting supply chains to normalize after the end of this year, or can this kind of fluctuation of prices and uncertainty stay for much longer?
Well, from the forecast, it seems to be the worst has not come yet, and the prices of the commodities are going to increase in the upcoming few months. The other challenge, the global challenge which is going to face the world, is the real production itself, the cultivations of commodities and wheat and grains in particular, which is going to be next season. So the wars are going to come. What we want from the world that they have to work together. The synergy is very crucial now, and let's put our egos and our political matters aside and think about how we're going to come out more strongly from this tough situation that faced the world.
And when do you think we'll be over the worst? When's peak stress for trade globally?
It's going to happen soon. So in the upcoming few months, we're seeing things are picking up.
Have you enjoyed Davos? Anything productive? What's the question you've been getting the most?
Very much how the UAE is tackling this, and throughout the various engagements of our delegations and ministerial participations, we sent very strong messages that we're part of the global. We're going to do the best to bring the best practices, and we're going to continue with the same principles that the nation has been built upon: sustainability, openness, and communications, and reaching out to everyone. And that's the message that everyone has to carry out from Davos.
Because of the specter of recession globally, in certain parts of the world, do you think trade deals are being signed quicker? Usually it takes years. years, do you think there's going to be an acceleration of that process?
It all depends on the willingness of countries. We saw that throughout our discussion and negotiation with India. We did it in 88 days. We did the second one with Israel in 4.5 months for deals which usually takes more than a year or two. So if the willingness is there from both parties, things are going to progress. The same thing with RCEP, which has been discussed as well earlier today. It all depends on the countries and moving quickly and see the added value of such agreements. Let's forget the small stuff, which is going to be a barrier, but the bigger picture has to be always the key objectives and aims for all of us.
Minister, thank you so much for joining us on Bloomberg TV today. That was the UAE Trade Minister, Thani bin Ahmed Al Zawadi. Now, we're also getting some pre-market moves on Twitter, actually up some 5.7% in U.S. pre-market trading yesterday. Late last night, there was a huge flutter of news on Twitter. Elon Musk dropping plans actually to partially fund his purchase of Twitter with a margin loan tied to his Tesla stake, increasing the size of the deal's equity component to $33.5 billion. Now, on the back of that, and also on the back of board changes, Twitter gaining some 5% in pre-market trade. Coming up, we'll speak to Takeshi Ninami. He's the president of Centauri Holdings. This, again, a conversation on inflation, on supply chains, and of course shipping. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. It's day 4. It's been exhausting. We are like running on caffeine. I'm going to look at the right camera because I haven't had enough espressos. I am delighted to be joined by Jacinda, who's on top of it. I'm like a walking mess because we've talked about inflation. We've done like 500 panels. And the mood is, I think, one of resolve. Chief executives want to do better, but it's very difficult to see when all of this bad news ends.
Well, you're right. It's a challenging environment, and for a country like Japan in particular, Fran, it's also about the weak currency. I mean, we've been talking about how Japanese companies can't stop talking about their currency at a 20-year low, and you know what? Where will it go from here? Let's get insights.
Yes.
Right?
Bring our next guest in.
Yeah, that's right. Takashi Ninami, President and CEO of Suntory. Takashi, good to have you with us. I mean, how are you looking at the weekend? The worst currency among G10, the worst currency among Asian economies as well. And here we are. I mean, how are you coping with the weekend?
Well, we announced increases of some key brands, both soft drink and alcohol beverages. And I don't think our clients and consumers are happy with that, though they can afford at this moment, but I'm not sure toward the Christmas time, because wage hike is not enough. But things are more complicated between B2B, which means corporate to corporate, more than 10% increase of prices. But we can pass to consumers just maybe 5%.
Why? Because you're worried that they then go to a cheaper brand, or you have some very, very high-end, very luxurious drinks. Can they not afford a 20% hike like the Chanel bags?
As a matter of fact, those big brands who are premium or ultra-premium brands, we raised the prices already by now. But I'm talking about standard products like beer, like water. No. So people are accepting to some extent, but I don't think 10%. It's almost impossible to convince consumers and
so fair to say you're increasing your prices again. I need more coffee.
Or a whiskey. No.
You're going to increase your prices again then.
Right.
To what extent?
Except branded whiskey. However, we have to think about what to do with the clients, because retailers are resisting not to accept any further increase of prices. So we will be fighting. But I don't know what will happen.
Tak, where does these pressures come from, right? So we're seeing it from everything to shipping. I guess it's packaging, plastic bottle. I mean, there's nothing. Do you see this inflationary pressure to stay on for the foreseeable future, or are you seeing in certain parts of your supply chain those prices going down?
Depends on Chinese policy of the zero COVID. For example, there are so many ships waiting to ship out in Shanghai. We found lots of shipments there.
Yeah, and they're sitting there.
Right. So I hope the lockdown of Shanghai will be eased around the time of, let's say, mid-June. And then things will be better, because the total demand is same. But, this kind of lockdown is shutting down any flexibility of global supply chain. So it's a matter of China.
No. We've been talking about inflation, and BOJ says that inflation at 2% is not sustainable. It expects that rate to decrease. Do you see that? I mean, we've seen the mistake being made by the Fed. Transitory, but it's not transitory anymore, and it's done in about 10.
Well, it's up to the acceptance level of the consumers, which is not strong. So BOJ is analyzing the mentality or psychology of consumers in Japan. I think from that standpoint, BOJ is right. But we businesses have to convince the consumers to accept higher prices, which means that we have to be more innovative, such as health consciousness, such as innovative products like zero sugar content beer. So we have to be more innovative so that we can be accepted by consumers. Otherwise, the current momentum is toward the not accepting, huge hike of the prices.
So this could be also like, non-alcoholic gins, but I guess the margins on those, again, you can't demand the same prices as some of your, 30-age whiskey.
Exactly. I mean, we have to change our portfolio, but just like whiskey, which is based on brand, so we can't change the brand. But our business comes from soft drink, nutrition products. That's much more than the alcohol products.
What are you positioning for? Are you positioning for a recession, a slowdown? I mean, expectations are the U.S. would, and you have a big market there. What are you positioning for?
In case of the U.S., I think a recession is coming. Maybe earliest the first quarter, maybe second quarter of next year. So we have to be careful how we increase the prices. As a matter of fact, we've been increasing prices of our premium and the ultra premium brands. But it comes to the standard like Jim Beam, I think we are very much cautious to increase prices. Key thing is how to innovate our products, how to increase our quality. So based on that policy, I think we can talk to consumers and clients to accept the price increases.
Tak, does that also actually mean a lot more volatility for yen? And again, we started off talking about yen. Is there anything that you can do to hedge against these currencies?
Well, because of a portfolio of sales, we should rely on more businesses other than Japan. And like North America, emerging Asia, which is, under the still fight against the COVID, but it will be coming back because young population and India. So we are shifting to those countries, and we are putting less resources to Japan.
M&A plans? Because you said it's difficult to do M&As when the border's still shut now that Japan is opening up and opening up maybe in a more significant way. Are you looking at M&As?
Well, in terms of the brands, I think we will be acquiring some key brands and sell some of our tail brands. I think that should be more activated.
Like what? Wait, this is.
I can't tell you.
You're selling, you're buying. This is like business happening. What would you ideally want to buy? And is it because valuations are cheap, or because it would really add something to your portfolio?
Well, we can add the value, such as we acquired On the Rocks, which is ready to serve. It's doing fantastic, such as with the airlines, with the hotels, because the travel is, now back. So we can possibly acquire that kind of, ready to serve or shelter. Those products are now, drunk at on-premise and off-premise as well. So, and we can increase quality. That's our strength as Suntory.
Yeah. Great. So you'll have to come back for that breaking news, Tak. Thank you so much for joining us. Haz and I could do with some pocket coffees or something like that. The Suntory Holdings president, Takeshi Ninami, there joining us. And thank you, as always, to Haslinda Amin here in Davos. Now, coming up a little bit later this hour, we'll also speak to Stéphane Bancel. He's the chief executive of Moderna. That's a conversation not only on vaccines, but we'll ask him also about monkeypox and whether we should worry about that. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Yes, it's warm and the coat has come off. It's very strange to see Davos without snow. The conversation here, of course, on politics, on inflation, on food security, and on Ukraine. Now, we'll have plenty more from Davos, but now let's get straight to the Bloomberg First Word News. Here's Alice Aikens. Hi, Alice.
Hi, Francine. In the UK, Prime Minister Boris Johnson's government will lay out a plan to help Britain struggling with the rise in the cost of living. Chancellor of the Exchequer, Rishi Sunak, will reveal a comprehensive response to help households. The offer will be partly funded by a windfall tax on the profits of oil and gas companies. Brazil President Jair Bolsonaro said he and President Biden will have their first one-on-one meeting next month. Bolsonaro told CNN Brazil that he will try to reset the relationship with the US at their next meeting in Los Angeles. Bolsonaro is coming to the US for a regional summit. The massacre at a Texas school has revived discussions of so-called red flag laws as one potential compromise between Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. Still, there are divisions between the two parties over the specifics. Philippine Central Bank Governor Benjamin Diokno will be the country's new finance secretary, under President-elect Ferdinand Marcos Jr. Marcos made the announcement in a televised address confirming an earlier Bloomberg report of the central banker's move. BSP Monetary Board member Felipe Madela will serve as the head of the Monetary Authority for the remainder of Diokno's term. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine?
Alice, thanks so much. Alice Atkins there in London. Now, coming up, more of our exclusive conversation with the chief executive of Saudi Aramco. Today, oil up, and it's really dragging higher some of these energy stocks. Overall, stocks a little bit mixed. The focus firmly on what we heard from the Fed, the fact that there was no more hawkish rhetoric coming from the Fed. And that's, I guess, in certain parts of asset classes giving a bit of relief. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Aggressive policy. Fed minutes show agreement on the need for half-point hikes in June and July, but questions remain over the path for rates later in the year. Stagflation signs at Apple. The iPhone maker announces that it is keeping production flat for 2022 at the same time as raising salaries amid a tight labor market and unionization efforts. NASDAQ futures follow the news. Plus, more must-watch interviews this hour, live from the World Economic Forum in Davos. We'll be speaking to the Moderna chief executive, Stéphane Bancel, very shortly. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, let's cross to Doha, where our reporter Simone Foxman is with Torsten Müller-Otvos, the Rolls-Royce Cars chief executive. Simone, over to you.
Thanks, Francine. Torsten, we are so happy to be here with you today. You guys came off a record 2021 year, record sales, in part, I think you said, because COVID made people realize life is short. How's 2022 shaping up, and is it the same driver behind?
No, 100% right. First of all, thanks for having me here this morning, Simone. And no, it was a fantastic year, 2021, even better than we thought in the beginning. And yes, there is a certain, let's say, truth in it, what I said, that people recognized or acknowledged that life can be short, and that made them think you only live once. Enjoy your life, and that's the reason why
in 2022, have they changed their mind?
No, not really. But that's the reason why we also had a fantastic first quarter, which is great for us, and also the next quarter looks good. So I think we will see again quite a strong year for us, despite obviously some constraints happening in the world. When you think about the Ukraine war, Russia, not any longer a market for us because we immediately ceased the Russian business.
So give me a sense of how your order book looks like overall and how that's impacted your order book generally.
Yeah, I mean, we've never sold so many cars to Russia by intention. We always kept it pretty, let's say, limited. And I think that was a very good decision to do so, because for us it is not a big issue, let's say, to deroute or reroute these kind of orders into other markets worldwide. We currently have one of the strongest order books ever. If you order today, you will probably take delivery in a year, even longer. A black batch Cullinan, just to use this example, you probably wait until fall next year already. Wow. And that's a pretty long order bank. And I mean, it's great business for us, yeah, and it's all over the world. Pretty strong. I mean, we currently see in China, due to COVID lockdowns, a certain slowdown, but I'm pretty sure once China is reopened after COVID, that business will again strive.
Well, a big thing for our Bloomberg viewers is the chip shortage. I know you've told my colleagues in the past that BMW gave you guys first priority allocation in terms of semiconductors. Is that still the case? And how much visibility do you have right now into chip supply?
I mean, so far we have been very lucky because the group provided us with everything we needed. There are some chips we need to source ourselves, and we are on it daily. We haven't lost a single car due to chip shortage worldwide, and I think it was a very wise decision as well by the BMW Group, because you can imagine contribution margins per car are in the brand Rolls-Royce the highest, and for that reason it's good to get all the chips from them, and yeah, that made our business also very robust and yeah, running.
Okay, how about supply chain issues in terms of, you know, you need parts. China has various shutdowns, as well as Brexit has posed an issue for some automakers.
Yeah, supply chain is something that worries us, I would even say daily, and we are on it. And now with all these port lockdowns in China, we also see certain constraints now. We are flying now parts that makes it, let's say, faster for us. We bridge it by air bridges, as we call it. And I think that's something which you really need to concentrate on daily, and to make sure that your production still gets all parts. If only one part is missing, I can't finish the product, obviously. Your point about Brexit. Brexit is not really such an issue for us. It's a little bit more complicated now, maybe to export and import parts, but I think we got over it, and it is now something we understand and how we handle that, and for that reason, that's not an issue that puts any constraints currently on our business.
You're here in Doha, in part to open a new showroom. This is a place where you don't even really see very many hybrids driving around, and electric vehicles are the key for you, all electric by 2030. So how do you go about selling these vehicles in a place where there's been slow uptake?
Yeah, I mean, for us, this is not automotive business we are in. Sounds funny, yes, our products have 4 wheels. It is technically automotive. But the rationale for buying a Rolls-Royce is luxury good. And I think as long as the proposition is excellent, I'm not worried about that. And rest assured, Spectre, that's the car you are talking about, our very first electric Rolls-Royce that comes into the market by end of next year, will be a stunning Rolls-Royce, promised. And it will not in any way disappoint clients. It is first of all a Rolls-Royce, and second, it's an electric car. We also know that all our clients do have many, many cars in their garages. It's similar to like our wardrobes. You have for every occasion the right means of transportation.
So they need to have a Rolls-Royce, a Spectre, an electric vehicle in there.
And it's anyhow about all of them have home charging without any problem. They have charging at the offices where they travel to. It's never long distance travels. So I'm definitely not worried about it as long as the product is stunning and is emotionally appealing, and this is the case, I promise.
Okay, well, emotional appeal of Spectre. What can you tell me about some of the technical specs, battery, range, those sorts of things? We're all eager to hear.
I bet you are all eager to hear, but I'm tight-lipped on that because we are currently in the testing phase. We've just started a couple of months ago the very first testing at Arjeplog, our Arctic Circle testing ground, and for that reason next steps are going now even into hot climate and so on. We will talk at a time. I can assure you it will be sufficient, as Rolls-Royce is always talking about numbers, and clients will not be disappointed about it.
Oh, I'm sure. It sounds like a sexy car so far. Just finally, you've made this decision to skip plug-ins and go to all electric 100%. Entirely. How do you know that gamble has succeeded?
I mean, first of all, we are probably the most customer-centric company on earth. We know, and I'm not saying me in person, but my organization knows really every single client. That's the reason why we are also very shy with volume growth, because you can only do that kind of direct interaction with clients when you have a certain, let's say, size. Clients are telling me very much that this is the right thing to do. It fits perfect to Rolls-Royce. It's silent, it's talky. We are not defined by loud exhaust noise or roaring engines, whatever. Rolls-Royce was always about silence, and that is exactly what electric propulsion brings. And it even refines Rolls-Royces up to next levels, I would say. For that reason, I'm pretty sure that this is a very good decision.
Torsten, thank you so much for joining us. Torsten Müller-Ottwusch, the CEO of Rolls-Royce Motors. Francine, I'm very excited to get in one of these silent, interesting vehicles. Hopefully someone will take me for a ride in a Rolls-Royce when these come out.
There you go, Simone. The offer is out there. Simone wants to be picked up in a Rolls-Royce. Simone, thank you. Simone Foxman there with the Torsten Müller-Ottwusch Rolls-Royce Cars Chief Executive. And it's extremely clear that if you're at the really high end of luxury, you can demand higher prices. Demand is there. We were also having a conversation with the Valentino chairman saying that the rich have gotten richer, but actually it's food inflation, security, and of course everything that has to do with famine and the potential impact on food prices. That's worrying a lot of participants here in Davos. Now, coming up, we'll also speak about COVID, vaccines, and health with Stéphane Bancel. He's the chief executive of Moderna. That's coming up shortly, and this is Bloomberg.
the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in Davos. Now, joining us to talk about the vaccine, COVID. Do you remember that? It feels like because we're going from crisis to crisis, a lot of people have forgotten we had COVID-19 just months ago. We are delighted to be joined by Stéphane Bancel. He's a Moderna Chief Executive Officer. Stéphane, a great pleasure to speak to you. I feel like large parts of the world, including the U.S., is now saying, look, it's like COVID never existed. Are we too complacent?
I think in many parts of the world we are too complacent. Still, people are getting their boosters. I think there's a lot of fatigue, as you know. I really hope that as we go into the fall, people get their second generation booster, the one we're developing now, that we should be able to launch late summer. That will be adapted to Omicron and have also two mRNA, the old virus in it as well, the vaccine. I think that's really important. What I worry about is especially people at high risk, 50 plus, immunocompromised, people with comorbidity, not getting their booster in the fall, and then in the fall or winter getting COVID, but having very low or no antibodies left, and then being severely sick.
So what's your biggest concern? I mean, there's a development of the vaccine. I guess, the gold standard would be to stop the transmission. So it's not that I don't get as sick, is that it completely stops it, or is it convincing people still that your vaccines are safe?
It really depends on the groups. That's why I think it's tough to have one rule. You still have a lot of people that have not been vaccinated with any vaccine. And then you have people who, for that vaccine, will protect you against everything, transmission and disease forever. And given the virus is evolving so fast, I think it was not an hypothesis that was correct from a scientific standpoint. I think with time, as the virus slows down its mutation, because it's not going to evolve, in an infinite way, it just cannot because of the size of a spike protein. I think we're going to see longer and longer protection. If you remember, the current vaccine against Alpha and Delta held very well. It's Omicron, because the genetic drift was so big that it didn't help as well for infection, but it helped for hospitalization.
But is this going to be a yearly jab, and can you combine it with flu?
Yes and yes. So we believe for people at high risk, again 50 plus and so on, in the category, we're going to need an annual booster, but it's going to be in a quick injection, and it's going to be having a nice winter. And what we're doing is indeed combining all the respiratory vaccine into one, so flu and COVID, and RSV and others that people don't even know of, but they get sick with, so that you get one shot early in the fall and you have a nice winter.
But this is for, I imagine, Western countries, right? There are large parts of the rest of the world, China, with still that zero COVID policy. How will that evolve? Are we going to 2-3 speed? And how difficult is it to also convince emerging market countries that a vaccine is safe and that they should take?
Yeah, so I think the emerging countries have done a great job understanding the technology. We have great scientists and doctors and vaccinating their people. It's, of course, it depends on some countries. Some are not as well vaccinated. I'm worried about China and the current policy. I think it's unsustainable because the virus only becomes more infectious. So I think what was amazing management of a virus in 2020 is turning a liability now, and the only way out is having a high-efficacy vaccines.
Yeah, but is it because the vaccines are not as efficient, or because people don't want to take the vaccine in China?
I think it's both. I think you have a lot of older people that have not taken any vaccine, and then the vaccine efficacy was not great with the initial strain. So think about what it looks like with Omicron now.
The share price of Moderna has been under pressure. Why?
I mean, one of the things I don't control is the stock price. I think people don't see the power of a platform. Unlike traditional biotech companies that are analog companies, onesies and twosies of drugs that have no correlation.
all of our 30-plus vaccine in development, 30-plus vaccines, are all using exactly the same chemical matters as the COVID vaccine, which has been approved by the authorities. And so if you look at it now, we have 4 vaccines in phase 3, and we're preparing those 4 launches. What I'm very excited about this year is we're going to get data in liver rare disease, in cancer later this year. We just announced that with Vertex, we have found a way to get mRNA inhaled into the lungs. We're going to start with cystic fibrosis. That will be in the clinic this year and straight into patients. So with $20 billion of cash on the balance sheet, so it's around a little bit less than half our market cap in cash, and this platform for which we're investing behind, and we're buying back shares. I think people that are buying now are going to be really happy down the road.
But is this a regulation, timeline concern? So do you believe that because of COVID and the vaccines were approved so quickly, that this kind of speed can be used for other vaccines, or will it slow down again?
So it will slow down a little bit, but where the mRNA platform is quite magic is if you look at our flu and our RSV, we're able to go from starting a phase 1 to starting a phase 3 in around 12 months. It takes usually 4 years with traditional medicines, with the same regulators. So I think the platform in its speed is going to still deliver a lot of value for patients and investors.
Stefan, we saw Pfizer sell certain drugs actually at cost in certain countries that need that the most. You're selling, I believe, stock options or shares for nonprofits. Is our relationship, or is the healthcare relationship with charity and doing good for the world changing?
So I cannot comment about Pfizer, but I can, of course, applaud what Pfizer is doing for low-income countries. I wish we had done it earlier, because those countries have been suffering for lack of product. As you know, we are selling our vaccine at cost in low-income countries, like Pfizer is doing for the vaccine. And we're going to have a very progressive strategy for low-income countries as we launch more products. So my stock option is something quite different. It's just that my first grant as CEO of Moderna is going to expire next year. Yeah. It's a pretty big grant, because the company at the time, was pretty tiny. The strike price is 99 cents. And so my wife and I decided to give all the proceeds to charity after tax. It's just that what we want to do is that we don't need all that money, and we want to use the money to help suffering in the world. There's so much suffering in the world that we want to use that capital to help foundations.
And maybe it could inspire others. So if you're watching, think about this as well. Stefan, what should I do about monkeypox? Should we really worry? Is it like just a case of concern?
So we're monitoring closely. We're also working in the labs on vaccine candidates, just in case. But we believe because the way the virus transmits from one human to a human, which is very different from flu or from COVID, it's not airborne, it's from body fluids. So I think it's mostly, intimacy, where you can contact the virus. So we think this outbreak can be contained. Public health authorities around the world are acting with a lot of urgency. Yeah. But I think the scenario that this turned into another pandemic is close to 0%.
Has the pandemic changed actually our relationship with, new diseases that should concern us?
I think so. What I worry about is because there's so many crises around the world that some governments are going to forget what just happened. But you have Moderna's commitment that we won't forget. We are building new plants around the world to build the distributed networks, Canada, Australia, more to come, Kenya, but more to come. We're working on the top 15 viruses that have been on the watch list of governments forever and scientists forever that nobody has really worked on. And we have committed in March in the UK that we're going to take into the clinic vaccine against those 15 viruses, so that if, God forbid, something happen again in terms of pandemic, we will be ready and go much faster than last time.
Stéphane Bancel, thank you so much for joining us here on Bloomberg TV. That was, of course, the chief executive of Moderna. Now, coming up, more interviews throughout the day here on Bloomberg. Also, we have this exclusive conversation with the chief executive of Saudi Aramco. That's coming up next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, markets, I have to say, they were a little bit encouraged by the less hawkish stance that we had from the Fed. Markets, though a little bit volatile, the FTSE was gaining. Now it's pretty much flat, dollar stable, and treasuries higher. Now, oil markets are balanced, but companies need to invest more in production to meet rising demand and prevent even higher price volatility. That's according to the Saudi Aramco Chief Executive Officer, Amin Nasser. We spoke to him exclusively here in Davos.
I don't want to talk about prices, but today we don't have a lot of spare capacity. Spare capacity is 2% or lower. In a market of 100 million barrels, that is very low spare capacity. Usually spare capacity give a comfort to the market that in case of any type of disruptions, interruptions anywhere in the world, that spare capacity will kick in and will supply the market. Right now it is going down, and it's quickly as OPEC and OPEC Plus releasing 400,000 every month. So very soon you have a world that 100 million barrels or more with basically no spare capacity.
So does that make you nervous, not having that buffer, that prices shoot up uncontrollably and that hurts demand?
It's always good to ensure that there is enough spare capacity in the market to supply or to mitigate any interruptions that might happen. You know, we've seen a lot of interruptions that's happening in different parts of the world, and that spare capacity will always help. Right now, I have been talking about for a long time, lack of investment is really not bringing additional supplies to the market, and there's not much investment going on.
So what's the solution for that? Because even if we start investing now, because of the crisis in Ukraine, the timeline is going to not match when we need possible extra supply.
You are absolutely correct. We have been, you know, since 2014, we're spending approximately $700 billion. We went down to almost $300 billion. We picked up a little bit to close to $400 billion in terms of investment. But that is not enough, especially with the increase in commodity prices. So you need more in order to even maintain your current supply in the market. It will take years to build any project. We announced our increase in capacity by 1 million barrels in 2020, and it will come to the market in 2027. So it takes time to do engineering, and it takes time to bring that capacity to the market.
Does it mean that we could see a lot of volatility in prices from now until then?
You know, there is need, as I said, for more investment. There is short-term investment that can happen. Shale oil can come to the market much quicker, but it is short cycle. But you need both. You need also an investment, a long-term project with more sustained plateau for 20 and 30 years. And that's not happening that much. You know, we are doing our part in terms of investment, but you need that to happen from all players, all energy companies globally.
That was the Saudi Aramco Chief Executive Officer, Amin Nasser, speaking to us here in Davos. This is what the markets are doing. A lot of people, when you talk and walk across the Congress Center, will ask you, hey, you're Bloomberg, what's the market doing? Because they do look at it as a benchmark of a correction that could be front-running a recession. Treasury yields falling after the Fed had signaled it could be flexible. So stocks a little bit mixed today. Again, traders weighing what the Fed minutes showed. They struck a less hawkish tone. We also had some downbeat remarks on China's economy by the Premier. I'm looking at energy shares, pretty strong. The best performers in the Europe stock 600, oil climbing. Data showed that further decreases in U.S. crude and gasoline stockpiles are coming ahead of the key summer driving season. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Katie Lyons in New York, Anna Edwards is in London, and this is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think globally there are going to be countries that have some really serious challenges.
I think fragmented globalization is what we have. We still believe that the economy is
a very global economy. You know, like reports of the death of globalization have been highly exaggerated.
The reality of the supply chain situation, though, is that every company, every electronics company is having to redesign for geographic resiliency.
I don't think you can just paint big tech with one paintbrush.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, May 26th. Our top stories today. Apple faces smartphone market headwinds. Bloomberg's learned it plans to keep iPhone production basically flat for this year. Elon Musk revises his bid for Twitter. He's dropping plans for a margin loan tied to his Twitter stake. Plus, he'll increase the size of the deal's equity component. And the Federal Reserve saw that aggressive rate increases now would give it more flexibility later. Minutes from the last meeting show support for half-point hikes in June and in July. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And Kaylee, tech news from Nvidia to Apple and other places, certainly a big focus as we get closer to the US session.
Yep, still about 4.5 hours to go until the opening bell here in the U.S. But of course, the closing bell, Anna, already has rung in Asia. It was a mostly down session overall. You had stocks down in Japan, in Hong Kong, but China actually managed to close the day in the green, albeit only by about 0.25%. But of course, in China, investors are still weighing monetary and fiscal stimulus against the economic backdrop that the Premier Li Keqiang said in some ways is even worse than the start of the pandemic in 2020. And you can see those growth concerns reflected in the Chinese bond market, with the 10-year yield coming in down for a fourth day in a row. Right around 274 is where it trades at the moment. That is near the lowest level since February. And also you have the Chinese yuan, the biggest underperformer among Asian currencies, weaker against the dollar by about 0.7%, trading around 675. Your big outperformer in Asian currencies, though, is the Japanese yen, stronger against the dollar to about 126.66. You had the BOJ Governor Kuroda talking about how that central bank is going to be able to exit from its decades-long monetary policy, also saying that more U.S. rate hikes won't necessarily weigh on the yen. Matt.
All right, very interesting stuff. I just ran over to my terminal to check our 10-year yield here in the U.S., see how many days it's been down. Actually, only 3 days in a row, because Monday we were at 286. Look, right now the 10-year yield is at 271, 272. So investors have been buying bonds for the past 3 days because of concerns about equities. We were up yesterday in the cash trade, closing up about 1%, but today the futures are down just a bit. Crude continues to rise. We're seeing both NYMEX and Brent rise. Right now, 111 for TI, and Brent is up around, I think around 114, 115 right now. Bitcoin is down 3%, 28,895, so below 29,000. Typically, retail investors or even maybe institutional investors go pile in at 30,000. So this is one of the very few days in the past year that we've seen it below 29,000. You may see buyers come in and pick it up. Anna, what do you see in Europe?
Yeah, a lot of interesting news flow surrounding Bitcoin overnight and what the miners are doing on that front. This is the European picture then, Matt, and it actually looks pretty mixed, pretty divergent. A lot of these markets responding to their own individual influences. The London market is flat, waiting for news there of a political and corporate nature later on. The CAC 40 and the Xetra DAX make modest gains to the upside. We started out pretty flat, and we've been following really the vibe coming through from US futures in the first couple of hours of trading here. You'll notice a big area of red, though, in the center of this map, and we don't know often talk about the Hungarian market, but that is in focus for us, and we'll get to that story in just a moment. The government taking action there. If we can roll on and show you what's going on here. This is some of the specifics around stocks I wanted to show you first before we get to some news out of Central and Eastern Europe. ST Microelectronic down by 1.9%. This, of course, a read across from the Apple news, the Nvidia news, nervousness around chip stocks here in Europe as well. BT Group down by 4.6%. It seems that the stake being taken, or that was taken last year by the billionaire Patrick Drahi of Altice. He's a French billionaire. He took a stake of 18% in this BT telecoms business here in the UK. That's going to be reviewed under security legislation. The second time in a couple of days that the UK government has drawn on that legislation to review some M&A. And here we've got the ruble. This is actually the ruble weakening a little bit. We saw a slightly bigger than expected rate cut coming through from the central bank in Russia. They've been concerned about the strength in their currency that's been driven by capital controls and perhaps also also by some of the policy decisions and the sluggishness in changing policy around commodities here in Europe. We'll talk more about that with our FX guest a little bit later on, but certainly we're seeing some movement in the ruble. And Budapest, this is what I was referring to, Kaylee, when I talked about the map. We've seen the government in Budapest, the Prime Minister Viktor Orban coming through with a windfall tax, not just as we've seen in Italy and we might see in the UK later, not just on oil and gas names, but this is a windfall tax on all what he calls excessive profits. It goes across the economy. It's oil, it's gas, but it's also retail, it's banking, it's everything. And it does raise some interesting questions about where that kind of windfall tax policy goes.
Absolutely, and that's something, of course, we will continue to follow on this program and on Bloomberg Television more broadly. As for what else we will be following in the day ahead, Turkey will be reporting its rate decision at 7 a.m. New York time. We'll look for any reaction in the Turkish lira. Then at the same time, Alibaba will be reporting its earnings results. Plus, on the economic data front, we'll get GDP from the U.S. at 8:30 a.m. New York time. And finally, more retail earnings, including Macy's and Gap. Matt.
All right, we begin with the Bloomberg scoop this morning. Apple is planning to keep iPhone production roughly flat this year as the market grows more and more difficult. Bloomberg's Danny Berger has the details for us on all things tech. Danny?
Yeah, Matt, it seems like it's been a really rough 13 hours for tech. Last week was maybe the week to freak out about retail. I wonder if this is the time to worry about tech. Now, to be certain, we're not freaking out here. Apple only down by less than 2%. But this is tech really coming on board with all these macro headwinds. With Apple, it is them keeping production flat. And also, earlier overnight, at least my time, Apple saying that they would have to raise wages in order to combat the tight labor market and also unions. So that's a story of higher costs and flat growth. Certainly gives you that stagflationary type feel. But it's not just Apple that concerns are abound by. Anna, you mentioned NVIDIA. They were warning basically on every macro force you could possibly warn on. They warned about Ukraine. They also warned about supply coming out of China. So supply issues there. NVIDIA down about 6.25% pre-market. And then you also had Snowflake warning about growth. Corporate spending they feared would slow. That's down about 15% pre-market. So you really get this whole encapsulation of tech, no matter what kind of tech company, all the ones we've been hearing from really throwing out the warnings.
Well, and elsewhere in tech, Danny, of course, we continue to follow the Twitter Elon Musk saga, and now that margin loan is going away.
Yes, indeed. So you'll recall that part of the loans that Musk had gotten for this package was $12.5 billion specifically to him. So these were personal loans, and the collateral for it would have been Tesla. Now, the issue for that is that Tesla shares have lost about a quarter of their value over the past month. And if it had stayed $12.5 billion, that margin loan, he actually wouldn't have had enough unpledged Tesla shares to put up the additional collateral needed. So earlier this month, he announces he has some equity backing that essentially slashes that need for debt in half. Well, yesterday we got the announcement that he's doing away with all of it. So now the trouble is not necessarily getting that extra collateral, but getting the extra equity. Where will it come from? He mentioned in the filing he's going to ask existing shareholders like Jack Dorsey to stay on board in the company. But of course, Anna could end up selling more Tesla as well to get the equity.
He could. Danny, thanks very much for the update. Danny Berger on some tech themes overnight. Back to the macro, and the Federal Reserve saw that aggressively raising interest rates would leave them with more flexibility if needed. That's some of the story coming out of the minutes of this month's policymakers meeting. Joining us now to share his thoughts is Mark Cudmore, Bloomberg Markets Live Managing Editor.
What a treat.
Mark, good to see you once again this morning. I know Mark and I present a show a few hours earlier than this, which might be news to the US audience. Let me ask you then about what you took away from the Fed minutes. You've had some hours to think about it. Some people saying this wasn't as hawkish as they'd anticipated. Others saying, hang on, this does not contain any dovish messaging.
I think it's the latter camp I'm in. I think, first of all, I haven't taken away loads from this because it is a few weeks old. I think it's been surpassed by events. But I think the dovish interpretation is slightly mistaken. I think they've made very, very clear they're going to focus on inflation. That was actually slightly more hawkish in that message about being expeditious and trying to reach neutral rate rather than, we've moved way beyond transitory from a year ago. They're very, very focused on hiking. And I think this idea of flexibility in the future, yeah, that's a truism. Of course, if they hike more now, they have a little bit of flexibility. But I think it's misplaced to overly focus on that element.
By the way, I noticed China's Premier Li offering some pretty almost dire warnings. Are they getting prepared to break away from their, 5.5% growth target in China?
I think they might be, but I think simultaneously, I think they're going to really ramp up the efforts to boost growth as much as possible. Bloomberg Economics, I believe their forecast for this year is 2% growth, so way below that target. Now, I think the Chinese government are going to fight back and not let Bloomberg Economics be right, not because that's their goal, but they're really going to bring out the bazooka. And my team in China thinks that Li Keqiang's messaging this week was a real ramp up in the rhetoric we've seen from China. So the theme of the last few months has been the Chinese policymakers making promises that they're going to support the markets, making promises that they're going to support the economy, but ultimately all they deliver underwhelms. My team in China thinks the signaling this week was different from Li Keqiang. It shows they're really, really super concerned that this is an existential risk for the Chinese Communist Party, its leadership. They need to step it up, and the fact that Shenzhen immediately followed through on concrete measures is an important sign that may be missed by some of the American audience arriving in.
All right, Bloomberg's Mark Cudmore, great to have you this morning. Thank you so much. Now let's turn to politics in the U.S. Of course, the massacre at a Texas school earlier this week has revived discussions of so-called red flag laws as one potential compromise between Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. President Biden spoke at the White House yesterday.
Second Amendment's not absolute. When it was passed, you couldn't own a cannon. You couldn't own certain kinds of weapons. It's just always been limitations.
Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from D.C. for more. Anne-Marie, we know Second Amendment issues have long been a problem. It's hard to rally bipartisan support around the idea of universal background checks or an assault weapons ban. What is the likelihood of some kind of compromise on these red flag measures?
Well, it's definitely a starting point that there could be a compromise. I would say we're nowhere near there just yet. But there are several Senate Republicans, most notably Senator Marco Rubio, who want to give grants, money to states to be able to enact these red flag laws, which basically says a family member or any individual in society, law enforcement can go to the court, get a judgment, and go and remove a firearm or not be able to allow that individual to buy a firearm if they're deemed unstable or a dangerous individual. Now, you have already 19 states and Washington, D.C. already have these red flag laws, and a lot of these states enacted them after the another deadly, horrific massacre, and that was the Parkland, Florida high school shooting. So there is potential for this. Steny Hoyer, the House Majority Leader, he is on recess along with other House members. They say they're going to debate this when they come back. The issue, of course, would be what kind of compromise this really looks like in the details to make sure that 10 Republicans, they can get on board. Senator Chris Coons yesterday was being a bit more pessimistic, saying we'll never get those 10 Republicans to sign off on this. So that's really in the Senate where this would become a hurdle.
Anne-Marie, thanks very much. Thanks to Bloomberg's Anne-Marie Horder in Washington. Coming up on this program, currency markets in focus. We'll talk to Chris Turner, Global Head of Markets at ING. We will talk about the strength of the dollar. Have we seen peak dollar? We'll also talk about what the central bank in Russia is doing with the ruble and commodities and supply chains. Part of our interview with the Rio Tinto CEO, Jakob Stausholm. That's still ahead. Plus, a long time coming. Today's Big Take story examines how market collapse of tech might be a great opportunity for the industry to reckon with its success. Read more by typing NI Big Take into your terminal. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to
oil wells, and no one gets much benefit. Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Earnings season continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. We have talked and will continue to talk a lot about the Fed. We're going to talk a lot about credit spreads and how they affect the markets. But I also want to focus in a little bit on China. We touched on it with Mark Cudmore just a moment ago. I've got a chart showing economists' forecasts for 2022 GDP projections, and they just continue to fall. 5.5% is the official target, and typically China hits its official target. But economists have lowered their expectations first to 5.4%, then to 5.2%, then to 4.9%. Now we're expecting 4.5% growth, which is far below. That would be a massive gap compared to how close China is to its targets historically. Let's bring in Ven Rom right now, a Bloomberg Markets live strategist, to talk about how this affects global markets. How important is the Chinese engine, Ven?
Morning, Matt. The Chinese engine is, of course, incredibly important to global supply chains, so the manufacturing engine of the world, of course, and all that. But, you know, what is happening in China is not surprising. I mean, we are not going to get growth of 5.5% in this environment where we have got COVID zero policy implemented as zealously as it has been. And with the yuan is at 670, around 670 levels, it needs to weaken a lot more for the economy to grow. But on your question specifically for how this impacts Fed and the global policy making, I don't think the Fed is going to go stop because China growth is going to slow, because it is known that growth is going to slow. Growth this year, US growth this year is not going to be anywhere near as robust as last year, but it is still going to be above trend growth, and the Fed will take that. At the moment, the Fed is preoccupied by three words: inflation, inflation, and inflation. And they're going to go at it, and they're not going to stop.
Okay. And then we know what that has done to expectations for tech stocks, and we see futures down once again on the NASDAQ. How far can the NASDAQ fall in your assessment? You're taking clues from credit markets, I think.
Absolutely, Anna. If you look at the credit spreads between the investment grade credit and the earnings yield on NASDAQ, there is an uncanny correlation between the two. And in the past 10, 12 years, what that suggests is there's a strong mean reversion tendency between the earnings yield on NASDAQ and the credit yields. So if you look at that, we are like minus 45 basis points between the earnings yield on NASDAQ and investment grade rates. So if that lopsidedness corrects itself, we are due for a 9% drop in the NASDAQ from yesterday's levels.
Will the Fed tolerate that, Ven? Will a Fed not kick in at that point?
No, I don't think the Fed is going to be unduly concerned about that, Kaylee, because it's the Main Street that the Fed is concerned about, not so much as Wall Street. If NASDAQ falls, they will see it as a correction. They've anyway said any number of times that asset values are stretched. And if NASDAQ falls and S&P falls a bit more, they are not going to be worried. And their focus is right and center on inflation at this point. They're not really going to lose sleep over some drop in the S&P or NASDAQ.
Okay, so the Fed's not too worried about the pain in equity markets, just like the Bank of Japan doesn't seem all too worried about the recent weakness of the Japanese yen, yet it's strengthening today. How sustainable is that?
I think the yen is vastly oversold and it's incredibly cheap. If you look at the real effective exchange rate on the yen, it's the cheapest it's been in decades and decades. So there is a valuation metric at play. Kuroda this morning in Parliament told parliamentarians that, look, we will manage an exit if there needs to be an exit. It's not going to be unduly stressful on the BOJ. But he wasn't suggesting that they are going to exit imminently. In fact, he said that 2% inflation in Japan is not sustainable beyond this year. And if you look at the take-up on the BOJ's auctions, rate auctions this month, they haven't had any takers at all. So it doesn't, and the yields have come off the 25 basis points band for the upper threshold for the 10-year yield. So there is not a whole lot of speculation that Japan is going to abandon its policy, curve control policy anytime soon. But that said, the yen, as I said, is very cheap, and therefore it will advance a bit more.
Ven, thanks very much. Ven Ram joining us there from the Bloomberg Markets live team with his views on various asset classes. For more market analysis, check out MLIV Go. That's the place you'll find the Markets Live blog on your terminal. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In Texas, companies will effectively have to take a vow of neutrality if the latest school shooting sets off a debate over gun control. Otherwise, they run the risk of losing business with state agencies. A law that took effect last year is aimed at protecting the gun industry from discrimination, similar to laws used to protect people from racism or other forms of prejudice. The ability to open up society with low levels of death has kept Norway on top of the Bloomberg COVID resilience ranking for a third month. A 91% vaccination rate in adults has helped the Norwegians keep their fatality rate low. Ireland came in second in May, while Denmark overtakes the United Arab Emirates for third. The UK is in 14th place, while the US is 31st out of the 53 countries scored. Russia finished in last place. Singapore's President Lee Hsien Loong is warning against isolating China. He spoke after President Biden visited Asia for a series of summits that excluded Beijing. Lee said if the U.S.-China relations continue on this path, it will lead to further splitting of supply chains or worse. He said it's far better for China's economy to be integrated. And in the UK, Prime Minister Boris Johnson's government will lay out a plan to help Britain struggling with the rise of the cost of living. Chancellor of the Exchequer Rishi Sunak will reveal a comprehensive response to help households. The offer will be partly funded by a windfall tax on the profits of oil and gas companies, Anna.
Coming up on this program, we'll talk about FX markets. Chris Turner joins us, global head of markets at ING. We'll talk about strength in the dollar, weakness in the euro. Have we seen the last of those trends, or will they return? We'll also talk about what we've heard from the Bank of Russia. That's conversation next. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Apple faces smartphone market headwinds. Bloomberg's learned it plans to keep iPhone production basically flat for this year. Apple's asking suppliers to assemble about 220 million of the devices. Elon Musk revises his bid for Twitter. He's dropping plans for a margin loan tied to his Tesla stake. Plus, he'll increase the size of the deal's equity component. That could reduce the risk of the deal for both Musk and his lenders, especially given the recent 40% drop in Tesla's stock price. And the Federal Reserve saw that aggressive rate increases now would give it more flexibility later. Minutes from the last meeting show support for half-point hikes in June and in July. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Matt, what's the focus pre-market over in the US?
Well, it looks like we have at least turned positive on futures, but it's interesting. Okay, very slightly positive, but it's interesting because we still have investors buying bonds right now, pushing the yield down to 272. Like I said, Monday we were at 286. And investors are also still selling off Bitcoin. We're back above 29,000, but just barely at 29,075, and that's off 2.3% from where we were at midnight. So there's a couple of risk-off indicators. I'm not sure how much higher we can climb on futures, especially with the news out of Apple and the news out of Snowflake, maybe weighing on tech stocks today. NYMEX crude is up to 111.16, and we see Brent up as well, so a little bit of gains there. I think there is a little bit of faith, maybe, Kaylee, put in China's ability to ramp up stimulus, and in the Fed minutes saying maybe, you know, if we raise enough, we could lower later. I'm not sure how solid that is.
Yeah, how hawkish or dovish were those minutes, really? I think that is still a question up for debate this morning, Matt. Of course, you mentioned the news out of Apple, the news out of Snowflake. I'm going to go ahead and elaborate on that a little bit. Of course, Apple, according to Bloomberg's reporting, going to keep production of the iPhone steady this year, around 220 million units. They, of course, are facing a number of headwinds that they already had warned about. The idea of supply constraints going to have an impact on sales this year. That stock is down about 1.5%. And speaking of supply constraints, COVID-19 and the issues that it's having on production is weighing heavily on NVIDIA. It reported after the bell last night it cut, or its revenue forecast came up short because of some of those issues. That stock is down the better part of 6%. And as Matt mentioned, Snowflake really taking it on the chin this morning, down about 14% in early hours after it signaled slower revenue growth to come. It, of course, is that cloud software company, and its growth is slowing down. One more positive story out there, though, is Twitter, which Anna mentioned. Elon Musk getting rid of that $6.25 billion margin loan, instead going for $33.5 billion worth of equity to fund his deal for the company. That seems to be giving Twitter investors a little bit more optimism that this deal will eventually go through. That is reflected in a stock moving higher by about 5% this morning, getting closer to that $54.20 offer price. Though, Anna, we're still trading on Twitter at 39, so that gap is shrinking, but it's still pretty wide.
Still there, then. The gap still exists. A lot of tech themes, then, Kaylee, as you've just detailed, and some of those spilling through into the European session. Overall, we see that the Stocks Europe 600 is up by 0.25%. Here's some tech weakness, though, for you, and focusing in on what NVIDIA had to say in particular. This is a chip maker here in Europe, ST Microelectronics, and it's down by just over 2%. Tech is one of the weaker sectors in today's session. BT Group down by 4.3%. This is a telecoms business, and we saw a French billionaire, Patrick Drahi, last year take a stake in the company, and it's up to 18% now. And we just heard from the UK government this morning that they plan to review that under national security grounds. Clearly, telecoms being critical infrastructure for the nation. We're talking here about the Russian ruble. We heard from the central bank in Russia. They brought forward their central bank policy meeting by a couple of weeks, and we got a surprise size of cut from them. It wasn't a surprise that we saw a rate cut, but we did see a surprise in the size of it. It was bigger than expected. It has led to some ruble weakening, which apparently was the intention. We will talk to our next guest about that then, Matt, a little bit later.
Yeah, absolutely. But front and center, really, the dollar. Tom and Lisa had a fantastic interview with Scott Minerd yesterday out of Guggenheim. He says the dollar's outlook depends on what the Fed does with rates. He spoke from Davos.
I think as long as we stay the course on tightening, which I think we will through the summer, the dollar's going to do fine. But if the Fed blinks because of financial panic, which I think there's a high probability of toward the second half of the year, then I think the dollar will come under pressure.
Chris Turner, ING Global Head of Markets, joins us now to talk about this, and you know, right now we're at 1230 on the Bloomberg Dollar Index at an historically high level here. Does the Fed blink, especially considering what we saw in the minutes yesterday? Chris, what's your view?
I don't know. I thought those minutes actually were pretty hawkish. It was pretty confident. They looked through the kind of weak 1Q GDP figure and focused on strong consumption, strong investment. And James Knightley, our US economist, thinks 2Q GDP will be pretty strong. So I think it's probably too early to say that the Fed blinks. So we've already had quite a good concession in US rates over the last 3 to 4 weeks. The pricing of the terminal rate for the Fed next year has come off about 25 basis points, and perhaps that's kind of nearly enough for the time being, because as we think there will be 2 further 50 basis point hikes, and I think the dollar stays pretty strong this summer.
The dollar stays pretty strong this summer. Good morning to you, Chris. So what does that mean for the euro? We've heard a lot about the euro this week. We heard from Christine Lagarde setting out her plan, quite a candid assessment of where we go. That triggered a lot of commentary from the hawks, which moved the euro. We then saw some commentary from the doves, sort of fighting back. So where does that leave us? We're at 106.93 right now.
Yeah, I think we're probably moving into a range, maybe like 102 to like 108. So recently we're at the top of the range. And I think the hawkishness coming through from the ECB was really a kind of like verbal intervention in a way. How do you try and support euro-dollar? You try and talk up the prospects for ECB kind of tightening. But I think you could look at Lagarde's blog on Monday as potentially trying to bring everyone together. And you saw the hawk from the Dutch central bank, Klaus Knot, yesterday saying, you know, fully subscribes to everything in the blog. So I think we're sort of settling down onto a path of 25 in July and 25 in September. And perhaps that run on the euro hawkishness, the topside run in the euros perhaps has run its course.
Yeah, she told our colleague Francine, of course, she doesn't like to talk about FX, but you do wonder if there was anything to do with getting closer to parity that triggered that thought process, or at least setting it out so openly. Let me ask you about the ruble, because we saw sudden weakening of the ruble given the invasion by Russia of Ukraine and the war that takes place there. But then real strengthening in the ruble as capital controls were brought in. Too much strength to the ruble, it seems, for the comfort of the central bank there, and we got surprise scale of cuts today to interest rates. What did you take away from what we saw?
Yeah, I think definitely you're right. The ruble was too strong because it sort of cuts FX export earnings for the Russian budget, and that's their concern there. So ideally they do want a weaker ruble, but we probably think the ruble would only weaken later in the year once the EU really agrees on those embargoes on kind of Russian oil, and that's in the balance for the time being. It seems that that's a direction of travel. Over the short term, though, I think ruble is very much driven by domestic commercial flows. So Russia is still earning FX from, you know, gas and oil. Imports have collapsed, so the current account is very strong. So it's a very kind of artificial domestic commercial market for the time being. But I think the rate cut in itself won't really damage the ruble. It's really got to be the impact on Russia's FX export earnings, which will impact it.
Okay, Chris, so Russia's cutting rates. We know a number of central banks around the world are hiking them, including the Bank of England, and that's on the monetary policy side. On the fiscal policy side, we just had some headlines crossing out of the UK government saying Rishi Sunak, the Chancellor, will be giving comments to the Commons at 12:30 p.m. UK time, 7:30 a.m. Eastern time. And according to the Times, he will be announcing £600 payments for 8.4 million households, of course, trying to deal with the cost of living crisis as people face higher prices. At the same time, growth is slowing down. How do you view the specter of stagflation in the UK and what it means for cable?
Yeah, well, the sterling certainly kind of weakened over the last month on those Bank of England effectively forecasting a recession in 23 at a time of like high inflation. So that reassessment of the Bank of England profile lower on the back of those comments had weighed on sterling. But today, though, I mean, you talk about, in a way, fiscal stimulus coming through from the government to address that cost of living crisis. And perhaps you could argue that sort of looser fiscal policy might allow a slightly sort of tighter monetary policy to come through from the Bank of England. So actual today's event news, I think, could actually be marginally sterling positive. But for the second half of the year, the market still prices a lot of Bank of England tightening. The rates, you know, well above 2% by the end of the year. And our house view at ING is perhaps there's a pause at about 150. So there might be a period of reckoning for sterling in the second half of the year.
Okay, Chris, we've almost completed our lap around the world. We've talked the UK, Europe, the ruble, the dollar. Let's turn to Asia, because as we talk about fiscal and monetary factors in the UK, you have China attempting to introduce both fiscal and monetary stimulus to offset some of the growth impact of COVID-19. How much success do you expect them to have, and what does that mean for the yuan?
Well, at the moment, it feels like there hasn't been a big bazooka-style support to the Chinese economy, and you're seeing that in the renminbi. So I'm a FX guy, and we look at, the renminbi is a big determinant of non-dollar currencies right around the world, and the renminbi having had a big sell-off, 6%, mid-April to mid-May, and then a big recovery. I think we're now moving into like a 665 to 680 renminbi range, but the renminbi is telling us, and you probably say Chinese equities are telling us, that they're yet to be convinced by the size of these stimulus measures. And I think the jury's out, and the external environment with higher dollar rates will make an environment for a stronger dollar and keep the renminbi under pressure.
Okay, we'll watch the Chinese currency then. Chris, thanks very much. Thanks for your time. Chris Turner from ING. Coming up here on Bloomberg Television, Apple will keep iPhone production flat in 2022. We'll discuss the challenges ahead for the smartphone industry next. We also heard about their plans with regards to pay in the United States. We'll throw that into the conversation too. This is Bloomberg.
We are constantly improving our product, our policies, and our processes in order to earn more trust. We believe Twitter is a place for different voices and perspectives to be heard. Our rules are enforced objectively on content and accounts, and our policies remain neutral to political identity and ideology.
That was Twitter CEO speaking at the company's annual shareholders meeting yesterday. Now, elsewhere in tech, let's turn to the Apple story and the Twitter story as well. Elon Musk, of course, is leading his financing plan. He's tweaking it and increasing the size of the deal's equity component to $33.5 billion. Let's get more on what's happening in the tech sector with Alex Webb of Bloomberg Quick Take. So, Alex Webb, $33.5 billion in equity he now has to raise, but at least you have the removal of the risk of the margin loan. That seems to be giving investors some confidence now that maybe this deal will actually go through. Why would Elon Musk make these tweaks if he didn't ultimately want to buy the company for $54.20 a share?
Well, there, of course, were risks to Tesla shares as a whole, that there was a sort of implied message that if he was taking a margin loan against his Tesla stock, perhaps it means that he thinks Twitter is a better investment, moving capital towards that. There is still a long way to go in this deal. There's a lot of suspicion that Elon is going to try to renegotiate. We've seen not just Twitter shares, but social media stocks as a whole decline over the past few weeks as marketing budgets have become increasingly squeezed. And so now that he has a greater equity component, there might be, in fact, more pressure on him to try and reduce the price as well.
The most interesting thing to me is just the drop in Tesla. Unbelievable that it's fallen 40% since he made his offer. Let's get over to Apple. It's now a much bigger company, planning to keep iPhone production roughly flat in 2022. What do we take from this?
Well, there's a push and a pull here. There's the demand piece, inflation, of course. These are expensive products. So even though Apple iPhone customers tend to be perhaps slightly wealthier than those of Android, there are plenty of people whose budgets are being squeezed and maybe can't afford one. But there's also a push element, which is the supply chain, that maybe they can't get all the components they want. They had to restrict, well, they told the market that this quarter had been affected, the quarter in right now, by supply chain constraints. So you take those two things into consideration and you see Apple tamping down the numbers. Of course, we don't know. Apple doesn't publish anymore how many iPhones it sells. This is purely from our reporting and balanced against the market's expectations, which have been for 240 million iPhones. We're now reporting it's likely to be 220 million.
We were just looking at a graphic there that was talking about the different dynamics going into Apple at this point, and you've talked about the demand and the supply for the handsets themselves, but there's also the margins to think about. There's also the cost base that they themselves are facing, and that leads on to a conversation about wages, because they've said they're putting up wages for, is it retail staff in the United States?
Well, I think it's actually staff as a whole, which of course there are two pieces to that. The biggest number of employees are the retail staff. They have globally 400 stores. Of course, a large proportion of those are in the US. They're facing competition for staff, of course. They're also facing the threat of unionization, which has hit Amazon. Amazon has seen some unionization at some of its locations, so perhaps it's a preemptive effort to fend that off. But you then also have their engineers who are being poached or have been poached over the past 18 months, 2 years by Facebook in particular, as it accelerates into hardware. So they're fending off multiple fronts here with this sort of move.
Fending off multiple fronts. And where does that leave us on the Apple story then, if they've got all of these headwinds sort of assembled at this time, that had somebody on, one of our colleagues on the Markets Live blog is sort of referring to this as a fine example of stagflation dynamics?
Yes, and Apple has managed to diversify quite considerably. It used to be 70% of revenue was the iPhone. It's now closer to 50%. So it's getting recurring revenue to a far greater extent than it used to from things like Apple TV Plus, App Store, downloads, all those numbers, which they are more dependable than perhaps iPhone, even though the iPhone itself is pretty dependable. So it's no reason to panic from the Apple front, but around the fringes, just a few things chipping away at the story.
Alex, thanks very much. Alex Webb of Bloomberg Quick Take joining us here on set in London. Coming up later today on Bloomberg Technology, Google Cloud's CEO Thomas Kurian will be speaking to the team. That's at 5:30 p.m. in New York, 10:30 p.m. in London. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Wherever you get your news.
This is Bloomberg Daybreak with links.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. The Rio Tinto CEO sees China accelerating its growth targets to counteract the impact COVID has had on the economy. Jacob Stoutholm spoke with Bloomberg's Francine Lacroix earlier in Davos on the final day of the World Economic Forum.
China have just always been very good at focusing at, if they're doing a business, they're thinking also about the supply chain, the upstream supply chain. And maybe we in the West sometimes have relied too much just on the market. And what I see now is governments and big companies are much more focusing on how can we ensure that we have a very reliable supply chain, which should come as no surprise when you have as much disruptions as you have.
A lot of investors want to know about iron ore demand in China and how you see China developing over the next couple of quarters.
Yeah, no, look, there's no doubt that the fight against COVID in China has had an impact, very short term, on the Chinese economy. But China is very determined and seems very convinced that they will be able to meet their growth targets. And they're not right now accelerating their infrastructure investments. And when they're accelerating infrastructure investments, it's good for iron ore demand. So I remain cautiously optimistic.
Cautiously optimistic means not optimistic, but also not too cautious.
No, look, no, things are not booming, and they shouldn't be booming because it's a difficult world. It's difficult to get the supply chains to work perfectly with all the disruption we have in the world. So it's probably good that the world is not booming, but I see a decent demand.
Bloomberg's Francine Lacroix there in Davos with Jacob Stoutholm, the CEO of Rio Tinto, and it's great that she pointed out his corporate speak there. Cautiously optimistic is a tired phrase indeed. Bloomberg's market correspondent Kriti Gupta joins us now with her chart of the day. Wait, is this focused on mining?
It's not focused on mining.
Oh, okay.
It's actually focused on the S&P 500. But don't worry, it's not tired at all, or cautiously optimistic for that matter. We should look at the S&P 500. I really want to show the volatility. For our radio audience, this looks a lot like an EKG chart, honestly. But stick with me, I'll explain it.
That's a dangerous EKG.
It does look like a dangerous EKG. It's not exactly a good one, but this is what I'm trying to show here. You have two lines. You have a white and a purple. The purple, which shows the rolling 5-day overnight performance for the S&P 500. Right over it is the white, the S&P 500 rolling 5-day intraday performance. The difference is what people, say traders in Asia and Europe, are trading in terms of futures versus what American traders, or at least are trading during American hours. And what you're seeing here is that although it's pretty normal and pretty kind of natural to see that that intraday performance is going to be larger than the overnight performance traditionally, but what you're seeing in the last couple of months is this volatility spike. The range in which you're seeing the moves are much, much larger during the intraday session, which tells you that perhaps a lot of that volatility, a lot of that kind of flip-flopping between red and green, it's really coming from the American hours, whereas the European side, the Asian side, the overnight trading really sticks into a range. It speaks to, once again, what different parts of the world are feeling, Anna.
Yeah, and you wonder then what is driving that volatility, Chrissy, because it has been, of course, the talk about inflation and how high rates get. We saw that as a dominant theme for so long, but now maybe it is about global growth. So interesting in that context, if it's about global growth, then interesting that global investors aren't necessarily creating that volatility that we see in stocks.
Exactly, and I think that's the key point of the chart here, that you're actually seeing that this kind of risk-off mood, it is becoming more in terms of recession odds instead of inflation, and this global recession, regardless of how shallow or deep that might be. And I think this is really where the dollar comes into handy. We've been seeing this correlation between the S&P 500 and the dollar really emerge, or inverse correlation, I should say, and that really perhaps is driving how the world or the rest of the world feels about American stocks right now.
Kriti, thanks very much. By the way, we should promo our show later.
Let's do it.
Kriti and I are going to be co-anchoring the Open, so join us at 9 o'clock. I'm sure you'll stay watching Bloomberg Television all morning, but if you want to come back at 9 o'clock, you'll see the two of us taking you through the Open of U.S. stocks. Let's get to what Anna and I are watching today. I'm watching pending home sales. I think I really top-ticked the market when I moved back here and bought my house, Anna. Just
well done.
At the highest possible price. Although I got a better mortgage rate than a lot of people are getting. Now we're looking at 5.5% mortgage rates in the U.S., really boosting prices and lowering affordability. So it'll be interesting to see if we get a bigger than expected drop. Already looking for a drop in home sales today, pending home sales.
Yeah, a lot of people focused on the state of the housing market in the US right now and the messages it's giving us about the wider economy. I'm focused on UK politics, but what we will see from the Chancellor today in terms of trying to cushion the cost of living for those in the UK. We're going to hear from the Chancellor a little bit later. In fact, in about an hour and a half's time. And you rolled your eyes when I mentioned UK politics yesterday, Matt, and that was about the parties and the lockdowns.
Yeah, just because who cares if they drink a beer at their place of work? Times
were different then. It was lockdown. Anyway, this is forward-looking. This is about support for families and individuals and businesses that could lie ahead. We will focus on what the Chancellor has to say in an hour and a half's time. That is it for the early edition. Surveillance is ahead. This is Bloomberg.
City of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We came into this year saying there's going to be a slowdown, and that's what you're seeing.
People are bearish now, and that's a big change from 6 months ago.
I think now the market is saying, well, the Fed may be overdoing it, and therefore they may not be able to hike much above neutral.
We have a lot of uncertainty as to what the path of that inflation will be.
We're hoping that there won't be crashes, but hard landings, I think, are inevitable.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Bloomberg Radio, Bloomberg Television, worldwide. The hills are alive with the sound of decent weather. Perfect weather here on our final day at these meetings of the World Economic Forum. The clouds may be parting, but I'm sorry, the gloom sustains in Davos.
Yeah, and it's very much the nature of conversations, talking about the war in Ukraine as well as the lockdowns in China, but also a series of reports out of companies that really have projected downward their sales, whether it's NVIDIA, whether it's exporting goods, all of these different companies. How much does that really color the narrative?
We're going to frame for you the next 2 days here from Switzerland, and then we will be in London tomorrow, but with a very much market-centric analysis. Steve Off to join us later on the equity market. And what we're really doing here is looking at the calendar. I believe, do we have a holiday on Monday?
We do have a holiday.
Am I off on Monday? Am I off?
Yeah. Tom, you're off tomorrow. Yeah,
off.
you know what? Actually, most people in Europe are off today. So if you're in Europe and you're watching
Why aren't we
sorry.
off today?
Yeah, well, here we are. So I will say that possibly is why markets are so calm today. But it's a notable shift after so much tumult over the past few weeks.
And what's important here, before you go to the brief of what we're going to try to accomplish today, what's so important is we're so upside down, we don't realize it's the end of May. We're 1 month away from mid-year. We've got the jobs report coming out. I'm going to guess it's next week. I don't even know, to be honest.
It's next week. You're doing great.
But we're going to get a look at those PMI numbers that John Farrow thinks are so important, and we're going to really be able to get a first assessment before ECB meeting and then on to the Fed meeting.
We already got an assessment. This week we got data that was disappointing, and that gave basically a green light to have people ratchet back their expectations for the Fed, and frankly to ratchet back expectations for the longer term. I just wonder whether people are perhaps overly complacent and overly perhaps confident that the Fed can orchestrate something very gentle, which seems to be a growing consensus right now.
Just one statistic as we get to the brief here and a look at the data, and that is simply the VIX coming in 30 to a 28 handle.
Yeah.
It's, that's how desperate we are. We're looking for little tea leaves like that. Brief us here because I have no idea what's going on.
We're going to be looking at U.S. Initial jobless claims at 8:30 a.m. We also get first quarter GDP readings, but really I am focused on those jobless claims, as I know many others in the market are, trying to get a sense of how we gauge this labor market, how much momentum is there. We have seen a slight tick up, and I emphasize slight there because we have seen that, but still claims are near record lows, which does not give any sign of a loosening up of a very tight labor market. 10 a.m., this is going to be interesting. U.S. pending home sales for April. Earlier this week on Tuesday, we got new home sales that came in absolutely terribly below all estimates, absolutely plunging, and that really indicated to a lot of people a slowing in the market, which is basically completely on the heels of a 5% mortgage rate. And at 1 p.m., I'm doing this just for you, Tom. The Treasury is planning to sell $42 billion of 7-year notes. It matters. I want to know whether the Japanese investors come in.
Are you kidding me?
What?
Why a 7-year note? What's special about 7-year note besides it's the fondue belly of the curve?
Honestly, because it's always dramatic. It's always the one that goes wrong.
Really?
It's always the one that goes
Seriously?
right.
So
Seriously.
I did not know
because
this,
there's
folks.
not as much liquidity, and there isn't as deep.
Notes.
Oh yeah, I'm sure he's taking notes right now.
7 years is important.
Yeah, exactly. It's important, and it's good to know the marginal investors that come in there.
This is going to be an interesting set of hours before we go off to London, and wrapped around this are the two panels that I've done here at the World Economic Forum, and I really want to say, more than any year I've been here, they've done a great job of finding experts synthesizing the tensions of their narrow fields. This morning, Sir Lawrence Friedman with me, truly expert on war. We spoke of the giant Thomas Schelling as well, and maybe someone. We spoke to the finance minister of Malaysia about the unique challenges there. Synthesizing all this at any given bank are people like Marvin Lowe. He's senior global macro strategist at State Street, and he's the one reading and listening to what the experts here are saying to come up with a market view. Marvin, good morning. How have you changed your market view given the set of crises of this May?
Yeah, I mean, certainly we've had a lot to deal with and a lot to understand ultimately. I think that we've been kind of in the camp that the tightening that we've seen in financial conditions and really synthesizing kind of this different inflation ramp, if you will, was going to evolve the way it has. So we're starting to see a slowing. We know the consumer is tapped, and we're starting to see that substitution and a pullback in spending. Kind of having said that, the inflation story and probably I think for me more important, the job story is still something in flux, and we can consolidate around the fact that things are evolving the way we think they're going to evolve. But having said that, until we get a better sense on inflation and jobs, we're going to be fragile.
Which is the reason why, frankly, Marvin, I wonder about the complacency in markets that the Fed is going to back away from raising rates starting perhaps in September, the Raphael Bostic view of things. Do you think that this sort of narrative, which has gained increasing clout on Wall Street, has gotten a little ahead of itself?
You know what? It's not as if we've rallied a lot on stocks, right? It's not as if risk assets all of a sudden have recaptured half of the losses that they've experienced since the beginning of the year. So it's not euphoria. The fact that we could actually pin to a transmission mechanism that is potentially working in terms of slowing the economy is a reason to take a pause. Whether or not you believe that all of a sudden the rate hike process is going to end in July after the next 50 basis points is probably premature in my mind. There's a lot of wood to chop between now and the fall when we get a sense as to how much of the froth that's in the jobs market, how much of this kind of inflation discussion that's starting to spread is actually going to pull back as the consumer pulls back.
Marvin, how boring is the market until next Friday when we get that jobs report?
I don't think we have a lot of data. I mean, the jobs numbers is certainly the most important within the tier one data at this point. I think all of us are tired, so maybe we'll take this as a moment to consolidate. But you know, those choppy days based on an earnings release is still going to keep the market kind of jumping, if you will. And to a certain degree, that volatility can spike back forth. 40 is probably off the cards until we get a better sense of whether or not what we're seeing is a sustainable trend. But you know, we've got to keep on our toes for sure.
Marvin, State Street has been a leader in analyzing and questioning traditional asset allocation. And of course, the classic is 60% equities, 40% bonds. Boy, it's been ugly. I don't mean it's been ugly for State Street, but for the industry. Is the 60-40 certitude dead?
You know what? I don't think so. You know, certainly everyone was overweight equities coming into, or I guess somewhere in the middle of last year, and it ultimately made sense. Kind of those asset allocation tables have pulled back on that equity allocation component. But where it goes is the question as we kind of obviously adjust things. Something that Lisa's gonna love is that when we look at the reverse repo facility, for instance, at $2 trillion, people are retrenching from.
I think we've got some technical difficulties here on the 47 connections we've got between Switzerland and Boston and New York. Marvin Lowe, thank you so much for joining us. With State Street, Lisa, to me, this is absolutely critical. You've got the equity downturn, you've got the bond downturn. You're better at this than I am, but I'm going to pick IG. IG is not down 5%. IG is down 12%. You know, depending on how you look at it. And if you've got the portfolio because you read a book, you've been hammered.
Well, you've been hammered, but actually people are starting to come back. And we saw one of the biggest rallies in credit yesterday in a long time because people were starting to think perhaps we're seeing some sort of capitulation by the Fed already, that the tightening in financial conditions have achieved enough for them that they will pause in September.
Wait a minute. Is it a good thing that bond prices go up? This is like cosmic, folks. It's like the kind of conversation you'd have at 2 a.m. at your last corporate party of the evening. Let's go there, Lisa.
Okay.
Is it a good thing for all if bond prices go up, yields go down? Or does that mean gloom because the world's coming to an end?
Okay. honestly, right now, there are two ways to actually thread this needle. On one hand, people want financial conditions to remain tight because if they don't, the Fed's going to go harder core, right? They're going to be more aggressive. So things can't really move too much. You can't see too much of a rally in risk assets or else the Fed will be more aggressive. On the flip side, if you get some sort of stability, that might give people a sense that we're not heading toward the hard landing that a lot of people are worried about, and we're still going to be in this sort of low inflation regime after perhaps 2024. So honestly, I mean, your eyes are glazing over, I'm sure, but these are sort of some
Brian
things.
Moynihan's, we were telling him about this. I mean, let's go to the banker at Bank of America.
Yeah.
I'm going to say this without question. Bank of America was the most visible bank here at Davos in this odd meeting of May. They said, we're going to be here, we're going to be visible, which I give them credit for. And the answer here is Moynihan said he's not playing the parlor game.
No.
He's just trying to run a bank.
And he's looking at the consumer, which still looks strong and is a blessing and a curse. I think the biggest takeaway from this time is, no, it's
if
true.
you sobered up from last night,
I'm not sure.
Why is it a curse that the consumer's doing better?
Because then the Fed has to go harder in order to actually unravel this particular economic momentum. How do you deal with a labor market this tight? How do you deal with consumers that keep spending? How do you deal with the fact that there's no obvious way to slow inflation unless you tighten things up and actually increase the unemployment rate? These are the dilemma that people are looking at, and that's, I think, why it's a good thing and a bad thing.
And seriously, as Mr. Lowe said, and this moves forward to your study this weekend and into the analysis next week, I'm with Lowe. It's about jobs. Hatzius at Goldman Sachs is heated about this, that you've got to watch the job dynamics to figure out the rate dynamics.
Even Brian Moynihan of Bank of America said that what he's watching is claims, what he's watching is jobs, because that will determine how much trajectory.
Ethan Harris's job? I mean, is that?
I'm guessing he's good. I don't know. I'm just my hunch. I'm guessing
he's good. You think Harris's job is secure?
I don't know. You want to spread a rumor?
We got a better tape this morning. Futures up 12. Dollar giving it away a little bit. A euro 107.18. Perfect weather here in Davos. Stay with us here on an eventful Thursday. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The Federal Reserve saw that aggressively raising rates would leave them with more flexibility if needed. That's according to minutes of this month's policymakers meeting. Fed officials agreed that they needed to raise rates in half-point steps the next two meetings. The massacre at a Texas school has revived discussions of so-called red flag laws as one potential compromise between the Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. Still, there are divisions between the two parties over the specifics. And in the UK, Prime Minister Boris Johnson's government will lay out a plan to help Britain struggling with the rise in the cost of living. Chancellor of the Exchequer Rishi Sunak will reveal a comprehensive response to help households. The offer will be partly funded by a windfall tax on the profits of oil and gas companies. The ability to open up society with low levels of death has kept Norway on top of the Bloomberg COVID resilience ranking for a third month. A 91% vaccination rate in adults has helped the Norwegians keep their fatality rate low. Ireland came in second in May, whilst Denmark overtook the United Arab Emirates for third. The UK is in 14th place, whilst the US is in 31st out of 53 countries scored. Russia finished in last. And Apple is taking a conservative stance when it comes to building iPhones this year. Bloomberg's learned the company is asking suppliers to assemble roughly 220 million of the devices in 2022. That's about the same as last year. The mobile phone industry has gone off to a difficult start to the year, and production estimates are down across the board. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. Continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
As long as we stay the course on tightening, which I think we will through the summer, the dollar's going to do fine. But if the Fed blinks because of financial panic, which I think there's a high probability of toward the second half of the year, then I think that the dollar will come under pressure.
Scott Minerd with Guggenheim, thrilled he was with us yesterday. And of course, we led with crypto. As many of you noticed, Mr. Minerd making worldwide headlines, looking for a move from 30,000 down to 8,000. And some of you reminded me with love notes. Lisa gets the love notes. I get the hate mail. Thank you.
We got equal
for that
this time around.
But I got the hate mail yesterday to remind everyone that Mr. Minerd was gung-ho to 400,000. The nuance that I heard yesterday was Minerd looks for a southiness to Bitcoin before an uppiness. He didn't say up to 400,000, but he looks for some form of recovery.
Well, he said that it broke through a certain level that he had actually thought would be a buy point, and then he looked at the fundamentals and he looked at the ecosystem and said, "What? Where's the buy here?"
Oh, we had 28 people watching at that time, and I got 32 love notes, so we thank you for the repeat performance. Right now, and yes, it is Happy Valley, but pear-colored by all going on in the United States of America, and seeing the horrific news and beginning analysis of this tragedy in Texas, we go to Washington and our Anne-Marie Horton. Anne-Marie, the image that I see is, I'm going to use first names here, Beto speaking to the governor. There seems to be a modest outrage in Texas over Texas politics. How will that play out in the coming days?
Right, that was a feisty exchange, and then he was escorted out. This is Beto O'Rourke, who wants to replace that Governor Abbott. It's going to be a tricky situation in Texas because we talked about yesterday the fact that there's an NRA convention, you know, just a 4-hour drive of where this massacre of children at this elementary school occurred. And this town is really reeling from what is going on. You're hearing now a little bit more about the teachers, about the children, their parents. It's obviously incredibly devastating. And then in Washington, of course, this all comes to the politics. And the president, again, spoke about this tragedy. He'll be making his way with the First Lady to Texas. But he says he's sick and tired of it, and he wants change. And the place they're at now is potentially, Tom, these red flag laws, maybe as a starting point for legislation.
Somebody at the NRA, the National Rifle Association, is going to stand up, Anne-Marie, and say, well, we use 5-shot Remington 22s to squirrel shoot in the woods, so therefore we need to leave all guns alone. Anne-Marie, what is Washington going to do with what I believe is 5 magazines of 30 rounds of assault rifle ammunition?
At the moment, Tom, nothing. There has not been a ban on assault weapons since that expired in 2004. And it depends really who you ask in Washington on what the strategy should be going forward. There's wide support in the public on making sure that there's stronger legislation for background checks. But when you talk to Republicans, they really say a lot of it has to do with mental health issues. When you speak to Democrats, they say that, and the president yesterday said that we should not be giving AF-15s and assault weapons to 18-year-olds. This should not be allowed. They should not be able to purchase this. So you can see there's clear, obvious, and there has been for years and decades, legislation they really worked hard to try to pass after, even on a bipartisan line, but it was blocked by Republicans after Sandy Hook. But there's potentially this red flag laws for that to be expanded. 19 states and DC has it. And basically that means a parent, an officer can go to the court, and then the court could say that this individual is not stable enough to own a gun, or we need to take that gun away.
Anne-Marie, how much political oxygen is there left to deal with this particular issue, which has been a hot button and long-running issue, versus some of the economic challenges that really are dominating the polls?
Well, I think right now there's a lot of outrage in America that there is another mass shooting, and this one was at an elementary school. So their legislatures have to respond to that, right? They're getting phone calls. There's a lot of outrage. I know you're in Davos, but there is a lot of outrage you can see even on the social media networks, et cetera. So they are going to discuss this. Steny Hoyer, the House Majority Leader, said when they come back, the House from recess, they are going to discuss this red flag law proposal. But you have the Senate breaking for recess. So there isn't this impetus to get, pen to paper immediately to pass some sort of legislation. And then when it comes to the economic issues, of course, this is something the Republicans are going to really want to pivot now going into the midterms, because, the Democrats are going to want to use this tragedy, as the president said, and try to turn that into action. They're also going to want to use the potential overturning of Roe v. Wade, which we might be getting in June. They're going to want to use that to galvanize Democrats to come out and vote. But the economic issues, that is where the Republicans are really going to lean into.
When is Biden going to Texas?
We don't know the exact dates yet, but he did say that he'll be going there with the First Lady at some point. I mean, today is Thursday, so it does seem like this would be either tomorrow or a weekend trip. This is just for him to console parents and to show his support. For President Biden, this is something, losing a child is something deeply personal. He obviously lost his son, Beau, in his adult life, but he also lost a baby daughter when she was just very young. So this is something that is deeply personal to the president. And the First Lady yesterday was also asked about, and she said, of course we're going there.
Anne-Marie, thank you so much. Anne-Marie Horton in Washington. What I do here, Lisa, that I think is so important is to get away from the horrific headlines that we see and just go out and take a random X number of days to figure out how fast we get to the sum of individual shootings that sum up to these horrific shootings. And it's shocking, alluding to what Beto O'Rourke said last night, how quickly we get to further horror that's never reported.
And how it's normalized, how the shock fades, how the shock is different than the Columbine shootings because this has been an event that has been repeated, and how that's something that we're now talking about, that there's always a lot of talk and outrage, but nothing gets done. How do you change that?
Maybe it's outside our remit. I'll leave it to David Weston and Balance of Power and the great work Joe Matthew's doing. But, can I ask a dumb question? Why is this so rare in Europe? Granted, they do have shootings in Europe. I take that point. Versus the repetitive nature of it in America. To me, that's an incredibly important question.
I look forward to hearing what Joe Matthew and David Weston have to say about this. There are a lot of schools of thought, and I will say they are tough interviews. I will say over in Europe, the focus very much has been the horrors and the atrocities going on in Ukraine, and how that dovetails into a new energy policy, how that dovetails into a new democratic unity. And that, I think, is a notable theme at a time when there's a lot on the plate, but this is a different kind of threat to Europe.
It was interesting to see, and in the panels that I've had here at the World Economic Forum, how people immediately linked this war in Ukraine into the food inflation we're seeing in the United States. Some countries fairly successful like Malaysia, but others really having a tough go with it, with the lift in wheat and the lift in rice as well. Please stay with us. The Euro 107, I think we can get home. Steve Auth will be with us on the equity markets. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone, from the World Economic Forum meetings in Davos, Switzerland, on a perfect Swiss day here, nestled up against Austria and Italy. Lisa Bramwitz and Tom Keene. John Farrow is on assignment. We look forward to seeing him. Do we see him Monday?
Tuesday. We're off Monday. We just went over that. It's a holiday. It's Memorial Day. You'll be working. What will you be working on? He'll be doing his carpentry.
I'll be doing my reading.
Yeah, okay.
I'll be reading in. But anyways, we'll have John Farrow, I believe, with us on Tuesday, which is a good and beautiful thing. Lots to talk about. We're going to do the equity market here. If you are in any form of equity investments. What we're going to do here in 3 minutes is must listen. But right now in New York, a look at the markets, Kaylee Lines.
Well, Tom, not a lot of conviction in the equity market this morning. Futures have been fluctuating between gains and losses. At the moment, S&P futures up about 6 points, 39.82 where we trade, but NASDAQ futures are lagging behind due to a few individual names I will get to in a moment. In the bond market, we come in on the 10-year yield again, 2 basis points lower to 272. And in foreign exchange, it is the Russian ruble that catches my eye today after the Russian central bank cut rates for the 3rd time in just over a month from 14% to 11%, a larger cut than expected, really trying to rein in the strength of the ruble that has gone from strength to strength over the course of the war in Ukraine, even in the face of sanctions, in part due to capital controls. But now a ruble right around 62.74. Strength is starting to cause some concern for Russian policymakers. As for a few of those individual tech names I was talking about that were creating a drag on the broader market this morning, Apple is one of them, down about 1.4%. A Bloomberg scoop out overnight saying they will keep production flat this year for iPhones. 220 million units is what they're looking at as they deal with some supply side challenges. And of course, NVIDIA, the chip maker, also dealing with issues on the supply side, specifically stemming from COVID-19. That renders them unable to keep up with demand. That stock down 5.2%. As a result, Snowflake, the cloud software company, also giving a disappointing sales forecast. It's down a whopping 14.5%. The one more positive tech story out there this morning is Twitter. Elon Musk getting rid of that $6.25 billion margin loan. Instead, $33.5 billion worth of equity financing for that deal. Twitter shares up about 5.5%, but 39.20 guys still far below that 54.20 offer price.
Interesting. Kaylee Lines, thank you so much. And I must admit, Mr. Musk, a source of conversation here at Davos. Yeah. Our most important equity conversation of the day. Stephen Auth has decades of experience as the chief investment officer for equities at Federated Hermes. He understands how to participate in the equity market in a difficult moment. Steve Auth, I want you to discern having cash and having a little cash, like 4%, 7%, dare I say 10% of a portfolio, versus the emotion of being all in cash amid crisis.
Well, being all in cash implies you've got a really good crystal ball, Tom. And in this environment, I challenge anyone to have a perfect one. I mean, this is probably one of the more unusual environments here where even we who often have a kind of base case, there's probably 2 base cases here. And, you guys have been talking about them all week. It's, are we going to be in a recession or are we going to be in a rocky landing, maybe soft landing? But I think soft landing is kind of off the table. We're thinking more rocky landing or crash landing. We're on the rocky landing side of it. But I think you want to stay diversified here.